Yeah. Ow! Yeah. Y'all think too small, I got big dreams. You just starting, I'm way ahead at the end scenes. Started reading and dodging all of the quick schemes. Money like your Spotify, boy, I got 10 streams. And I'm still looking for more. My people, they got a soar. I'm putting that on the Lord. Ain't accepting, ignore. Just kicking down all the doors. Guarantee you, boy, if I ask for it, it's gotta be real big. I gotta make it just for my kids. And for their kids, it's kids. That's wealth, years and years. Promise my brother soon as he out and finish this bid, we finna do it bigger than anybody ever did. The odds is real big. Job that's real big. Satan trying a little. My God is real big. Stayed up on the ground and the cards is real big. I gotta do it big. The only way that I can live. And I promise I'm trying to. Before you count me out, homie, let me remind you. They was blocking the shine, now I think it's my time to. Counting them dollar signs like lights, they'll blind you. Let me rewind to back when I was broke and I couldn't acquire 2 cents. And now I got 2 rents. They was sleeping on me, homie, must have got too big. Call my phone, I be like, who this? Damn right, hell yeah, I'm brand new. Smell like can too. I'm fresh forever like canned food. Try and tell me what I can't do. I wanna see the world, my vision on Shamu. That mean I got goals that's real big, foes that's real big. Your offer too little, sorry, my soul is real big. Coming into the ring with blows that's real big. I gotta do it big, that's the only way I can live. I gotta do it big. I gotta do it big. I gotta do it big. Gotta do it big, that's the only way to live. Gotta do it big. I gotta do it big. I gotta do it big. Gotta do it big. That's the only way to live. Come on. Yeah, come on.
All right. Shout out to everybody. Peace, power, and profit. Peace, power, and profit. Good evening, good afternoon, good morning. Depends on wherever you are on the planet, right? Coming to you guys on this, Taco Tuesday, right? Still Taco Tuesday, right? Even though Chipotle stock is, still sitting on the moon somewhere, right? Shout out to everybody again. Hope you guys are having a great day. Coming on doing early in the week kind of assessment of what's really happening and popping in the market a little bit. Of course, try to add a little flavor wherever I can when I have the time to. And what better scenario than right now, because we are in the midst of a quarter short market week this week. And on top of that, we're all, sitting around like, okay, is this the Christmas rally, right? Or are they going to even have a Christmas rally in the stock market, right? Historically, I think they said, I think the stats says that at least 80% of the time, 75 to 80%, since its, existence value of it, that they've been kind of tracking it, I guess. I don't know. It's been successful, right? Well, we know for sure 2018, there was no Christmas rally, right? Because stock market was getting, getting this behind drug, right? It was dealing with what, tariffs, right? Tariffs was kicking everybody in the behind, right? High interest rate. Jerome Powell was raising interest rates. Trump was crying. It was just a hot mess, right? The stock market just pretty much plummeted, right? So we definitely remember that day. So it's not a given, right? Some people are, we're gonna rally. I'm like, no, don't speak in absolutes. Right? Markets don't deal with absolutes, even though it seems to be very, cherry picked and deliberate, right? In some cases, you can make that argument, but for the most part, we don't want to steer people in the wrong direction in terms of them, always counting on the markets to, validate its timelines, right? When these sort of, these type of events or whatever, right? So with that being said, we always going to err on the side of caution. We're going to be responsible, right? We're going to be responsible in terms of our fiduciary responsibility for ourselves, our families, whomever, right? So we just don't want to be chancing. Now, with that also being said, yeah, we got to, knock out, drag out, rally, right? Coming off yesterday's lows, right? And so a lot of people were, somewhat trying to front run the ideal if it's going to pop off, if the volume is going to, come into play. Well, we have somewhat of an opportunity to do so because we were getting close to filling a well-known notable gap that needed to get filled in the markets. And so, hey, to them, that was enough, right, to spark it, right? So we'll let, everybody have their own sentiment, surrounding that. Of course, if you see on the screen, I have, the thumbnail up pretty much describing, is this, is the Christmas rally still on for 2021, right? So you got you know, you got Benny Franklin up there, instead of Benjamin Franklin, we got Benny Franklin, Benny from the block up there, he got his mouth twisted up a little bit. He may not be too too convinced quite yet, but nonetheless, we know the algos are trying to definitely make it happen because there's low volume, right? Anytime you go into a holiday season, a lot of people are out of the market, they're in cash positions. They've pretty much taken profit in places where they feel like they had a chance to kind of remove a lot of that margin, that risk of margin. So right now the algos pretty much got the market. And then you got, of course, the dumb money retail traders in there trying to do what they can. So hence, that's why you got the new Tesla AI bot over there. That's the algo that's trading the market right now, right? So yeah, so we'll see, right? So again, historically, just using data, right? Let me get the link again because I want to share this with everybody so we can get the family inside the building today. Of course, I don't have it in, direct, commentary concerning, uh, you know, market value that you guys haven't seen yourself. So there's the link, guys, for the StreamYard. If you guys want to come on to the StreamYard, we invite you to come on. Please come hang out with the family because we are definitely people's first channel over here. We welcome people to come on, share your trades, share your ideas, whatever you may have. You're welcome here. So yeah. So what's going on over Chris Wood in the building? Our family, Sonny Boke in the building, right? Bacoy, right? Sonny Bacoy in the building, right? What's going on over Sonny? What's going on, family? Everything in the house. Brother Mathis in the building. Shout out to you, Oba, right? Everybody may be listening, tuning in, somewhere. I don't know if there's football going on today or not. Basketball season in, so I know people out there scrambling. Some people out there probably doing some late shopping. I don't know, right? Of course, if that's your thing, right? Do your thing, right? Do your thing. Just make sure you get the best bang for your buck, right? Don't be out there just catering to this market blitz holiday and you don't get the best bang for your buck. Meaning be conscious when you're shopping. Be a little conscious, right? Right. Look for those deals wherever you can, so to speak, right? And then save a little bit for the stock market later, right? So again, shout out to everybody. Thank you for tuning in. So we're gonna jump in and I'm gonna jump off. I'm not gonna be on long because I got to get me some dinner, right? It's been a long day, right? And I ain't gonna be here all night. Right. Again, hope you guys had a great day as well in the market. So without that, with that being said and out the way, without further ado, let's jump right into it. So of course, just looking at the market again, starting off at the charts, we'll hit some of the, the basic data points that, in terms of, market performance or whatever, for the most part, we know, again, we saw a market that was just, banging, right? A market that was just banging today. And heat map definitely showed to be a lot of green, right? So Christmas green, that is, if you want to say that, all right? We got a lot of Christmas green, right, in the markets. And that rally was somewhat, some people say it was expected. I'm gonna go on the record and say I was expecting it. Why? Because we literally got within maybe $1 and maybe $1.15, 14 cents in terms of closing the gap that we had back a while back that needed to get filled in the SP 500, that is. And so knowing Wall Street's so greedy, they don't really play the numbers like retail dumb money is. They technical. They're like, okay, this is the gap right here. We hit this final line. That's when I ball in. Wall Street is of the mindset, okay, this is close enough. We're going to add here, and we're going to let them fight over the scraps in the bottom, right? We're going to do lift off here. And that's basically what the algos did. Algos know how to front run, the over technical trader who's literally waiting for, an intricate, dip to get, hit a certain pivot point or alert or alarm that person may have set. They'll do lift off like 30, 40 cents ahead of it, $1 ahead of it. Right. And they'll leave that person sitting there down there with their order still not filled. Again, it's a dirty game out here, right? But somebody got to play it. Right. So yeah, that's how this stuff works. What's going on over Sunny? Over Sunny didn't popped up in the building already. Shout out to him. What's going on?
Peace.
Peace to you, peace to the family. Right. Hope you're having a great day. Hope everybody's well. Just tuning in. Hope y'all having a great day. Again, we're just jumping in, sharing what we do. Out vocally a little bit and some visual, aid to that. In terms of speaking about this Christmas rally, right? Whether we're gonna have it or not. So, real quick, I'm gonna jump over to the chart real quick, and we're gonna, share a little bit of this, historical stuff that we be talking about all the time, right? All this historical stuff. What's going on over Chris? Over Chris and popped in that building as well. Shout out to you, over.
Peace, power, and profit over.
You got it, man. How's everything going down in the TX?
Oh, pretty good, man. Too many weather changes, but everything is copacetic.
Tracking. Well, it is. They say 'tis the season right now. I mean, man, the weatherman might be like, man, look here, bro. We don't know what's going on, bro.
Mm-hmm.
we just trying to make sure we give you something to
Bye.
roll with. Yeah, man. So yeah, man. So I know y'all been, like I say, watching this market a little bit too, and trying to make sense of it all, like we always do, of course. And just going back, using a little historical context, because, like I say, people like to look at markets as being Teflon done, they could do no wrong or whatever. But like I was saying before, if you guys, most of you guys were around in 2018, of course, where the market did not rally into the Christmas scenario, right? And typically when we say Christmas rally now, we know we're speaking basically the week of, into, the Christmas day. Wall Street, again, they get very crafty with their verbiage and their tone, right? They'll say, well, technically the Christmas rally is really supposed to start the week of, the Christmas, and it lasts all the way until the new year. Well, that means if it don't rally this week until the Christmas day, the excuse is, well, we still got another week, right? So that's basically what they're saying now, right? But technically, we know it's the week, leading into Christmas. So we're not going to allow them to tell us that it's not, right? So that's a lie. But anyway, so again, going back to 2018, as you guys see here, right? What do you see here in 2018, right? We know what we was dealing with then. We was dealing with what rate hikes. We were dealing with tariffs, right? So Santa Claus didn't come to town. Matter of fact, Santa Claus gave us some 1,000-point Dow days, 1,000-point down Dow days to be exact. And I'm sure that, if you guys were around during that time, y'all remember that. What's going on, Oba? Brandon in the building, Resident Hospice in the house. What's going on, Oba? Shout out to you.
Peace, family. How y'all doing?
Man, doing well, man. Happy to have the crew in the house tonight. Getting after this market. Discussing a little bit, some of this, this nostalgic, Christmas rally or not, right? Commentary within that. So again, today had was a great day, obviously, in the markets. I mean, for what it's worth, a lot of us caught that bounce yesterday, that dip, and was able to kind of eke out some nice little gains, right? So again, 2018 was not that. So just to show y'all what I'm talking about here, going back on 2018, this is on the daily chart here. You had everything except for Christmas rally, and we talking about the entire month was ugly, dang there, right? You had a little back end, try to push back, right? A little pushback on the back end of the the month. And it came literally the day after Christmas. Ain't that something? So Christmas was on a Sunday. If I'm not, was it on Sunday? I forgot what day it was on 2018. Anyway, as you can see on the 26th, literally the next day after, you had this big, after the fact rally, right? It was after the fact rally. And they used that as excuse to say, well, see, the market still tried to, do a little something, but it did not equate to that of what the dump that came on the back end of the sell-off, right? Dealing with, the value that the rate hikes were, definitely on and popping with Jerome Powell. That's when he was in this very hawkish stance. He was very, data driven. He wasn't emotionally compromised. Like, because Trump was always in his ear telling him, yeah, cut rates. Yeah, go ahead. Somebody.
Is your volume up? Or maybe it's on my end. I was trying to see if your volume was up.
Is it low, guys? Y'all let me know.
I can hear you, but I can barely hear you, and I got my volume all the way turned up.
Y'all let me know. Is it YouTube? Can you guys hear me clearly? Is it loud? What's going on over Rich B in the building? Brother P Smooth in the house as well. Hey, can y'all hear me loud? Press 1 in the back chat if y'all can hear me loud. I might need to readjust my mic volume. Let me know, guys. Let's see here. Let's see. Let me see. Jumping back and forth between Zoom and StreamYard when I do them training sessions. That probably always mess up my my scenario. Yeah, but if y'all can hear me clear on YouTube, let me know. So you can hear me. Okay, you good on YouTube? They say I'm good. What's going on, Brother Maniac? All right,
Brother Maniac. I'm gonna restart my phone and I'll hop back on.
Yeah. Try that over, and I'll be here. I'll let you back in. No problem. Okay, no problem. So yeah, guys. So we got everything except that, in 2018. So again, it's not a given, but today, was definitely one of those moments where it was an easy, kind of, market, trend up, even though we had that kind of morning, kind of stutter step, and then we kind of rocketed off that. Again, that just says that, they were trying to keep, the energy coming off the pivot from last night, the previous, obviously, night, right? Still alive to say, well, if we're going to do anything, it's going to be now or never, right? It was a now never kind of reality. And markets literally, use that or utilize the idea that they know a lot of people was wanting this to happen. They want to will this thing to happen, right? The ideal of it potentially happening. Well, they wasn't going to go out without a fight, right? They wasn't going out without a fight. So let me go to hourly chart so you can definitely see exactly what it looks like here on a more, concise time value of buyers just coming in off of, a very notable low. Course there, therein lies that 450 gap closure that we was talking about that, was waiting for that gap to get filled at some point, and then we have another one down here at 446, right? And so a lot of that was, again, people paying. Well, I say 450, but 450 was a major level support. But even though we know we had a gap down there, air pocket still down there at the 445, 446 area, hey, we getting closer and closer to coming down and, hitting some of these notable air pockets underneath the market that's got it basically, standing up, rickety as ever. But nonetheless, the dip buyers are still trying to prove that they are the bull comptrollers of this market. And for what it's worth, they've done enough to hold the investor sentiment intact, where people just haven't gotten too fearful, even though there's a lot of bad news surrounding the markets. If you want to say bad news, I just say it's just more organic reality news that's starting to come into fruition, where you can't downplay the data points that are very notable and need to be known, right? Of course, we got close to having yield inversion, so we close to having potential ideal of recession if they can't seem to get the bond market in control. You got interest rates trying to, wanting to go up. They can't be artificially suppressed any longer, because now the bonds are being, relinquished back to the market because the Feds are starting to slow down on their tapering, or start tapering, excuse me, and speed up on tapering, excuse me. And so, as the last report we got with the FOMC, a tune of $30 billion. Now it was 15 billion, now it's 30 billion. So that number is going to definitely provide a little bit of weakness in markets. People are like, well, it's not that much, but trust me, $30 billion of market money on a given is a lot of money. Right now, we know they had a tune of 120 billion that was going in, month over month. Again, reducing that by 30 billion. And then on top of that, you have, end of the year, tax loss harvesting. And on top of that, you have rebalancing. And on top of that, you have people who are now starting to do the rotation value of, trying to get out of some of these overbought, high PE 52-week high stocks, and they're moving towards more value cyclical plays that have a better bang for their buck, being they're oversold. They're not so much, a big issue for the COVID scenario as a whole. There's great inflationary hedges as a whole. Well, those plays are now starting to be picked up off the bottom of the floor. It's no secret there. And so even when those moments are happening, you're still going to have the big boys still trying to get them some money out of it too. So tech is going to rally when it can, et cetera, et cetera. So you expect that. And that if they rally, the broader market's going to rally with it. That's simple as that. So there lies what my little U-shaped bottom here, where the market's kind of pivoted yesterday. We kind of got to that point where we tapped that 451.14 area, somewhere around there. And after that, of course, when you see the algos are starting to kind of, cement themselves in a way where you can't, fight them, right? When the algos get to acting, a donkey, they're going to do what they're going to do. And so clearly you start to seeing that rounded bottom taking shape. At a point, we start to kind of have a flat top, breakout at that point here, literally almost to the T in terms of the volume of the candles there, here at that point around 451.60 area, wherever around there. As soon as I start seeing that, I said, you know what? Okay, I had swing puts into today, which paid out beautifully, right? Got a big bag off the puts, swinging them into today, obviously coming out of Friday. And lo and behold, of course, I was like, if we close the gap, get down to that 450 support point, that'll be just icing on the cake. But knowing how Wall Street works, I was like, anything close to that, then you got to be ready to pull the trigger and just go ahead and collect that profit, because Wall Street don't deal in absolutes in that perspective, right? Even though there seems to be a bullish sentiment where you could just buy the dip and you'd be good, but ultimately it's still not, a strategy we want to kind of fall back on, right? And so lo and behold, of course, we got down to that point, and then the market began to start, so allowing some of that inflow cash to kind of start to hit the tape. And I was watching it, level 2 at that time, and many other little indices, exchanges, whatever, and seeing how they were responding. And lo and behold, we kind of started to round the curve a little bit, right? Start round the curve. I said, okay, we go. Let me get me some couple swing calls here, right? All right, let me do my what they call my 2 up and 1 down strategy, where wherever the sentiment began to shift, I will go more risk on to that particular sentiment shift, and I'll backstop that or back hedge that with at least 1 ratio to that of the 2 for the sentiment, just in case things don't work out, right? Again, a little protection go a long way. All right, so that was the scenario that we got out of yesterday. So again, those puts pay out very well. And right after that, again, I started buying calls into the day, right? So I bought the 455s. Those were the my main target, right? Why did I chose 455s? Why? Because that was the level in which if you think about this candle here, where we gapped down from the previous day, that's where we kind of trended at or opened up at that point within the intraday, right? So that lets you know, again, this stuff is not really rocket science in that regard. You're just playing off the value of the price action that's given to you in that in the real time moment, right? So, that tells you that there's buyers and there's sellers at or around that price, right? So for me, it was a given. Once we rounded the curve around 451, start kind of climbing back into 452 towards in the 453, 452 area. That's when I started buying my 455, retracement calls, right? Notably, into Wednesday, even though we have a short week, there's no trading Friday. I could have bought the Thursday, contracts, but I'll say, what, I get more, more bang for my buck. I could buy more if I just buy the 455s, no big deal, whatever. So I bought a few of them, right? I bought, I think, one of them in my TD Ameritrade trade, and a couple of them in Tasty Works. I should have bought. Yes, you always say should have bought more, but nonetheless, it was somewhat of a, I just let's play on the sentiment of the market and see if we can get a bounce, and we got it. Lo and behold, we got the bounce. No, not rocket science at that point. Y'all saw it like I did. Now going into today, of course. I told myself, what, if we gap up, of course, in the futures, right, which we did, you had a massive, ideal of where people were just all over Twitter, within, Telegram, the Discord room, they was trying to pump, they was pushing that Christmas rally narrative. Oh, we finna Christmas rally, it's on now, bears are destroyed, right? Y'all finna be done. They finna smoke the bears and all that stuff, right? And so I'm like, okay, these people are going to be liberal with this money because they already kind of feeling good about, they feel like this gap is good enough to be, closed up in their perspective. And we were overdue in their mind of a bounce. Why? Because look here, going back as far as the 16th of December, what have you been seeing in the market ever since then? Downhill slalom, right? Jamaican Bob Hill slid down to the downside, right? We just been sliding off this little, off this little pivot here, this resistance here around about 470, right? Some people call it the double top, right? The infamous double top that got the market scared to go higher at that point. So be it. At this point, it is, a notable place of certainty, right? Uncertainty, excuse me, I should say, for people who want to get bullish above it because it failed, right? Now, but also, again, I like to use, cheat sheets and cheat codes and things of that nature to help me be more thorough in my trading, right? Oh, my bad. I gotta get over Chris in. I didn't hear him. This thing went peeking in my back. Sorry about that, Open Chris. Make sure I can hear you, get you in here. All right. So again, like I was saying, within that, I'm going to use things to that nature to help me be, more concise in my decision making. So as always, I like to do my, plus minus, split the market, split the channel, whatever, down the middle. And then within that, of course, I got my linear regression band on. And as y'all can see here on the hourly chart, what do you see? You see literally the S&P 500 come down here, tap the bottom of that linear regression band. Not once, right? Not twice, but 3 times. Right? Literally 4 times on this count here. Right? 3 times a lady. Y'all know the song. Right? That tells me right there, okay, they're defending. They're playing, a defensive football game here, right? So yeah, we know the gap, that point of support that we're thinking that everybody's going to, see get feel, or come down at least to that 450 support. Well, we may not make it there. We may not make it there, not in this setting at least. And it held up. I mean, who knew, right? But yeah, we did, so to speak. Why? Because I do say there are moments in the market that gives you that level of predictability, and you can trade thoroughly based upon minimizing your risk, right? When we say risk mitigation, right? Minimize your risk. That's just saying you just trust in a lot of the, the basic technicals and the fundamental knowledge that you got in terms of being able to read people, read the psychology of the markets, and you make your moves according to that. Simple as that. And within that, you already have an understanding what your threshold of pain is. Your stop loss is set based upon, here's, what you're willing to want to lose in this particular scenario if the trade doesn't go your way. And then you go out there and you go out there and compete, right? You go out there and compete, let your money go work for you, essentially. And that's essentially what I did. I didn't do nothing special besides I just read the linear regression chart. I saw how, again, when we got down to that, low points of 450, 451.70 area, I mean, the market would just spaz, and every time I got down there, like they was really trying to keep the market off 451.50 area. I said, okay, that seems to be a key point that the algos are starting to buy, right? Or some hedge fund, somebody was just fundamentally just buying at around that point all the time, and the market would just spaz up a little bit. It would run up to 452, 453, almost like one shot up. I saw that happen a couple of times. I said, okay, that's a fake out, right? I was just watching too. I said, I'm not going to give up my puts quite yet until I know for sure. And then I was just watching these little candles, like literally on the hourly card, as you can see, just like literally 3 hours here, where we played right at the bottom of that pivot of that support of the 451, 50 area, 451.60 area. And then eventually, we had some wicks that wick down below it because we had that low around 451.14, right? On this one right here, literally on the green candle at that, right? So that lets you know that that was the one that turned the market. Why? Because you hit low on a green candle where it closed green, obviously. But within that was a turning point to say that these people, they were just not going to let this thing feel it, at least at this point, right? They could have done on the back end of the day, who knows? But for me, that was enough confirmation for me to feel good about my situation, start, thinking about giving me some swing calls, right? And so I relinquished my puts inside of this candle right here. Why? Because it was a monster. And the way that it started, swinging, it was enough to make me feel comfortable saying, okay, yeah, I'm going to go and take the profit now. It was good, whatever. I mean, I get the 450, no need sitting there trying to hold it, right? And that was that, right? So again, that's what I'm talking about when I say, predictable markets, right? Predictable markets, right? You can literally see this stuff sometimes just based upon being disciplined and charting thoroughly, looking at all the variables, meaning, putting all the variables on the table in terms of, investor sentiment, outflow, inflow. Of course, I was looking at MOC from the previous day, previous scenario, in that case, Friday, and seeing just how people were feeling about, the markets. Well, we know people still a little skittish because of what? The jab scenario, still trying to figure out how they're going to, deal with this Omicron scenario. I mean, many other things, right? And then on top of that, it was compounded even more so because what? Joe Manchin pretty much just threw, gasoline all on top of Joe Biden back, right? Lit a match to him, right? Set him on fire, right? Because he pretty much just told the world that he's not voting for the Build Back Better plan, not within this year, this fiscal cycle here, right? Well, he still got a little bit in terms of fiscal cycle, in terms of Q4, but at this point, there would be no Build Back Better going into the end of the year, right? All right, until the new year, I should say. So that was enough to really cause the markets to get out of control. On top of that, you got, potential shutdowns and lockdowns going back in effect for these other nations, in Europe and Netherlands, and all that stuff start coming across the tape. So the news began to just really compound, right? The bad news began to really compound. So it just exacerbated the idea of the gap down, which we saw, no secret there, right? No secret there. And the rest was just, okay, well, if we're going to gap down like this, we might be going to run this thing down and close some air pockets, right? Let's close some gaps, right? Let's make a little, do a little some strain for a little piece of change. So of course, clearly we got one going back over here, like we talked about, right? This little 450, 449, 450 air pocket there, small, but it's a notable one nonetheless, right? So we blow it up a little, you can see a little bit more lucid, right? Right. Nonetheless, that's still an air pocket, right? It's still an air pocket. No matter how you look at it, it's an air pocket, right? So of course we were playing for that as a potential target or pullback if things were to go our way. Like I said, we got close enough, right? Close enough, right? Wall Street, they're giving sometime. Another time they just, greed is just still the name of the game, right? Greed is still the name of the game, right? And that was good enough after we witnessed that on terms of that linear regression band, how they defended it there almost in a straight line. Those, of course, those candles there. The rest was just healed, snap back, let's ride to the top. And we got that bounce today. And not only that, it picked up more more energy, right? We definitely picked up more energy when we definitely did what, make that push for the 200-day moving average on the hourly chart. And that was monumental because we know that 200-day moving average, even on the hourly chart, we know we watch on the daily for long-term scapes. But this was just what they call a bullish sentiment, acknowledgement, right? Anytime you can clear a 200-day moving average on the hourly, especially on the daily, but definitely within the hourly too, is very notable and it's commendable, right? It's not like, okay, that's just, all right, they just feeling it at around because we've already sold off enough. And that's enough to kind of make people feel like, we did okay. But no, that gives more people the ability to get more excited about markets bouncing. Why? Because algos play at around certain major moving averages. They trade at or around certain moving averages as well, right? These fund managers and whoever, they program their robots to do just that as well. So it's not like, you're strictly gauging this by investor sentiment, meaning, retail traders. This is also a stereo. And the crazy thing about it, if you look at that bullish engulfing candle that where it eclipsed that, not only did we break this resistance point here in this line here, this mid line here at around 458, because that was a major line that everybody was playing for as well. We eclipsed that and eclipsed the 200 moving average on the hourly chart all in 1 hourly worth of trading. That was enough to say, bro, yeah, about that, right? So if you were thinking about adding more calls to your position at that point, that was the time to do it. Why? Because that was just an aggressive move to extend the idea that if these people are going to get comfortable and say, we risk on, if nothing else, just for the last couple of days in the market, that was the moment for them to do it. And so forth, as of now, they're holding down that block, right? They're holding down that block. And so I bought me more calls. I swung calls into today, then I bought more for Thursday expiration. Of course, in this case, they're swing trades, no more, no less. Not like because I'm holding my way into Thursday. It depends on how this stuff breaks down. But I bought more, right? So I had the 455s coming in today. I bought 2 458s, and I bought another 455, right? That was enough to make me feel, really, really, I guess, in my opinion, of course, you can always get more, but I'm always trying to stay within the confinement of, if I'm going to, put that level of risk out there in terms of mental risk in my thesis, then that was enough for me, right? Because I did pretty darn well on my puts previously, right? The day before, I crushed it on them puts, right? So I was like, I'll play a little bit, right? I'll play a little, do a little some strain for a little piece chain, see if I can do. And it worked out, obviously, because the swing calls from the 455s off this balance here was enough to kind of really, start my day off in a very positive manner. And so that's what, again, I'm speaking about the idea of when I say the markets are predictable. In this case, that was, for me, that was enough to make me feel like it was a predictable. Because we got the bottom bounce. We got, the support, that was built, that bridge that was built underneath the floor at that point. The rest was, okay, yeah, if they can push it to 458, we know they're taking it over 460. That was just a lot of the energy I was seeing all over, Twitter, the chat room, stuff of that nature. That was the energy, that was the energy, so yeah, you can really put a, you can really put a solid thumbprint on markets once you start to really, slow it down and realize exactly what people are doing, right? What exactly are, the big money family, out there, in terms of the banks or the, the fund manager, whomever, what do they think? And then on top of that, you had, the pumper of all pumpers, right? Tom Lee in the flesh, right? From Fundstrat. Y'all know he like the market. They always go to Tom Lee when they feel like the market getting real, shaky, because they know he gonna give them some kind of astronomical bullish case on a very technical verbose way that make people get excited about it, right? Like a couple people can move the markets, right? He's one of them that they rely on especially on CNBC, to be that kind of cheerleader for the stock market. Another one is Tony Dwyer, right? Tony Dwyer is another one, right? The little bald head guy. He's definitely a market cheerleader when it comes down to it. Now, although he does have moments when he get bearish, he's more balanced than I say than Tom Lee. Tom Lee is just, man, he's just ridiculous, right? But again, that was enough to kind of ride the sentiment, right? They rode the wave off Tom Lee. They rode the wave off, the idea of the, the sentiment of the Christmas rally still possibly being alive. based on the fact that, they were still trying to say, well, the virus is not that serious. Okay, it might be, but it's not. We ain't going into lockdown. So, okay, what's the worst case scenario? We go back into lockdown. So they start weighing all those variables, right? And so what happened was Jen Psaki, right? Y'all know the White House press correspondent, for Joe Biden. They did something very unique. They pulled a playbook out of President Trump's playbook. Well, what did they do? They dog whistled early into the trading session yesterday, before today's trading action, right? Which today was supposed to be the day that Joe Biden was going to give his press conference concerning, the state of the virus, right? They had this all, this day kind of, annex for that conversation, right? So Jen Psaki goes out there and says, you know what? Just, as a heads up, just to let y'all know, there will be no lockdowns, right? There will be no lockdowns. And that was the fuel that lifted the futures market last night. Future market just start, ripping, right? I said, oh, here we go. They finna do it. They finna try to do it. They finna try to do it. They're gonna try to save this market, if nothing else, to make these people feel good about, staying put, not just exiting because of all this idea of the COVID stuff. And they already fighting because, they ain't feeling too well about the old vaccine mandate thing. And, the Court of Appeals repealed it from another appellate court that put the vaccine mandate back on, right? So they fighting between, those type of, courts, whether they're going to do away with that mandate or they're going to keep it on the book. So, Joe Biden was feeling good about the situation, right? He was feeling good about himself because he got him a little victory, right? Court victory. And, Dr. Fauci was kind of, sounding very dovish about the Omicron virus over the weekend because he was all over, like everybody press conferences and just having them on speaking about the virus. And so they were very, very careful and methodical with their words, not to spook the markets. Now, clearly today, when Joe Biden, made his little speech concerning stuff, and he began to take questions, someone asked him literally about, the extent of, the vaccine mandates and all that stuff. And he literally referenced that. Well, you can tell when there was information about the idea that Joe Manchin obviously kind of ethered his bill, that was enough to kind of drop the market. And then on top of that, people were concerned about the virus, right? So he kind of made two of them, he made them synonymous in terms of the risk factor. And then he said right after that, but it was, very obvious and clear that, we're not going to basically go into lockdown. We're not going to do lockdowns. We're not going to do lockdowns. No, we just need people to, get vaxxed, get the jab, all that stuff. Anyway, that was the sentiment. That was the energy. That was another, in my opinion, that was somewhat the icing on the cake, right? This was at 2:30. Now, mind you, that's at 2:30. Here's your, within that 2:30 candle, right? Clearly, as you can see there, right? It was basically ended up as a doji, right? You kind of had, some top and bottom wicks there, and throughout this kind of, this, I guess, leading into this hour of trading, the market was still, somewhat still on cruise control after we kind of breached that 200-day moving average here. And we're just kind of stepping our way to the upside. As you can see, those candles there, right? You can see that. And so, initially, a lot of people didn't know how to take, whether this was just, him pandering or, they were just, trying to save the stock market, or it began to somewhat give them a sigh of relief, right? Because for what it's worth, we already know about the feds. We already knew about, the idea that other nations are starting, trying to deal with this best they can. They may be going to lockdown, this, that, and the third. We already got supply chain issues. We can't afford to go into lockdown any more than that when our GDP is still up for debate, right? Because there's still this kind of, migration of workers who are not necessarily going back into the workforce. So they're starting their own businesses, this, that, and third, because they are now also concerned with this new virus. And, it's a lot, right? It's a lot to process. I know, I get it. But that's what makes us unique. Again, I say that because you have to be able to, parse all those straws and come up with a solid thesis on why you feel a certain value about this market. Whether you for or you against it, nonetheless, you have to put in that work to itemize all those things, those variables, and then you go out there and make an executive decision. Why? Because it's your money that's on the line here, right? It's your capital that's, and I'm speaking to the traders now, of course, not long-term investors, right? But even some of those long-term investors saw opportunities to buy the dip day. A lot of people were nibbling in on markets, right? I think that was Oprah Brandon spoke about that yesterday in our Facebook group. He's like, yeah, today's like today is the day you start what? You do a little shopping. And he was right. He was dead on, because what happened today, right? We had a nice rally, almost a 2% rally today, guys. Almost 2 whole % value of a rally today. Right? That's something to get excited about, if you ask me, right? Because again, if you caught that dip, you definitely, got paid into the rip today. No and if buts about it. I mean, literally, you had no really, you had no, opposition, to be exact. Because think about it, the first hour of the market. Okay, yeah, that candle there, yeah, we get it. We know this secret here, right? Anytime the market always hits a point of resistance and you begin to have weakness in, futures market leading into it or not, whether you do or you don't, doesn't matter. Technically, we've been getting a lot of what? Red, beginning of the market, on a consistent basis. Going back at when you hit the 470, look here. That was the beginning, first hour of the market, red. The next day, red. The next day, red. Even though we bounced, what we're going to be different from this one? We still ain't, take out the 200 moving average and like that. It's not like we gapped up that far, far up there. It was the same energy. We open up red, right? We open up, pull back within the gap up, and then the market reset itself, and then the buyer stepped in. So initially, when we got down to like 457, 50, 457, 30-ish area, I started saying, okay, guys, you might want to start watching the market for a bounce. I think I posted it somewhere like on Webull. Webull. I posted on Webull. I said, hey, yeah, I think we might be starting to bounce here, guys. I think we might be having our support or a bottom in for the day. And this was, again, roughly around about 430, 450 area, 457.30, 457.50 area. And lo and behold, the market, respected for a moment, then it plummeted down and came down like 456 and, like 456, like 60 something. I said, okay, they really finna try to shake some traders out. That's what they're trying to do. They're trying to shake the rest of these traders out who swung calls. And today it was already up, on the monsters level, right? So at that point, I stood my ground. And, right after that, I said, you know what? If we bounce back into like 457, 70 area, I'm gonna buy me some extra calls on top of that. So I bought like one day, and I waited to we got this count here, and I bought more. Right, that was it. I said, I'm not doing anything else. But that was our turn for the market. Right, that was a term, for the market, to show itself to be solid, and the rest was history. Right, we got through the push. Right, we got through the push. Right, so everybody was beating the drum, like push. Right, let's go. Right, they got it. You got to give it to the bulls in their perspective. Right, they got their push. And the buyer showed up, because again, at that point you can start seeing on the flow chart, the flow chain, obviously in terms of SPY, that is, right, the flow chart for it. You start seeing the call buyers coming in rapidly. They were just pouring in. People were buying a lot of in the money calls. They were buying, I saw some, even some buying, way out there like in the 470s. Like, dang, they really feeling, really good about themselves, right? So, for them to buy the 470s at the point when we were still sitting at around like 457, 458 area, I see, what they're trying to now plan for a particular idea that this Christmas rally is back on, right? So, leave it up to me. I'm gonna ride the wave the best way I can as well. All right, I'm not gonna be a Grinch, because I got money on the table too. But really quickly, let's run over here to the let's go with the bar chart really quick. All right, let's go look at that. See exactly what I'm talking about here. Where are we at? Okay, here we go. Let's run over here. All right. So bar chart, of course, in my opinion, is like the best, best tool ever to have if you're an option trader, right? Bar none, right? So let's go down here to the let you see exactly what I'm talking about here. Now, if you look at this from the value of intraday call and put buys, and all this stuff right here, a lot of this put volume, this came on the very back end of the market. A lot of this, intraday put volume came on the very back end of the market. Why? Because a lot of those traders who were short, into the market that didn't cover their position into the, the low of yesterday, meaning their profits, they swung those puts into today, and they got decimated. So a lot of them, didn't cut their loss. They doubled down. they doubled down the fact that the market still, to them, felt like, okay, we're still going to roll over. We're going to roll over, right? We're going to roll over at some point. And they may be right. We got tomorrow and we still got Thursday. But as of today, they ate a 2% upside sandwich today. Notice I said sandwich, not sandwich. They ate a 2% sandwich today, and it was not pretty. It was not pretty. Right? So a lot of them are revenge trading. And again, some of them, waited to that last, 10 to 5 minutes, because that's, typically that's one of my strategies. I tell you all about it a lot. It depends on how markets react throughout the day. Being patient, I like to buy my swing, positions that last 10 to 5 minutes of the market. Why? Because we also got imbalances, right? Imbalances came out today as well, right? Within that same time structure, right? I think the last, 12, 13, 15 minutes into the market close, you had imbalances coming out. So you want to see where were, the big fund managers and selling, or where they was buying into some of these, oversold positions we spoke about, right? And so a lot of this stuff began to lift the SPY on top of that, because, they all kind of, intertwine some way, one way or another. But nonetheless, you also had people saying, you know what, I think, we're going to get a pullback. And so I'm going to try to go against that grain a little bit. But for me, again, I kept watching people load that 470. All right. This was throughout the day too. As you can see here, look here. The 470s here got 40,000 intraday that came in today. 40,000. Again, marks love half and whole dollar marks. Now, these things were, as you can see here, dirt cheap. Now, throughout the day, they were up some. Now, it's showing that it's unchanged now, but you know how markets are in terms of, the delta, the volatility, the Vega, all that stuff, how markets move in terms of, revealing, intrinsic value when the option is moving, right? You need movement. That movement really came, again, when we make that big push over the 200-day moving average. So that's why some of those contracts that were dirt cheap, they was buying them at like 5 cents a contract. And, they kind of went up some. So even at that point, if people want to take profit that was buying that far out, they made them a couple little pennies, right? But they're still playing for the idea that they can get a little push, tomorrow. Now, again, as of now, we're sitting at 462, right? 462 and some change, somewhere around there, give or take. Or 463. We closed at over 463. Now, it ain't far-fetched, for the market to try to, go a little harder and squeak out another 5 or 6 points, right? Again, if they really want this crypto rally to happen, it's going to have to start, we're saying until tomorrow at least. It's going to have to start, tonight until tomorrow, because there's no, the market is closed, obviously, Friday, right? The market is closed. So, yeah, I was, again, weighing all those different factors like everybody else, so as of now, yeah, it's play ball until something changes. Now, again, we still got to get through all of tonight. There's still, countries out there who are very, they're very, I would say market heavy in terms of their weighted value, in terms of how the broader, global markets kind of look at them and saying, hey, if they're, going through it a little bit right now, we might need to be cautious as well. So we got to get through China, obviously, and we got to get through Europe tonight. So London session at 2 p.m., obviously, 2 a.m. And the Asian session, obviously, popping off literally, around this 9 o'clock area, what we're saying now, right? Even though Nikkei opens up before that. And so as of now, Asia is red, right? Asia is red. And so our future market is, the Dow's, is up. The SP, the US, obviously in this case, 500 is down slightly, but there's still all that momentum that came out of today. That is holding propping the markets up, right? So looking at this really quick here, right? Looking at this really quick here. All right, let me go over here. Again, thank y'all for being patient with me too. I know I'm kind of just, giving y'all my little rundown for today. It's kind of like a play, almost a play for play, but just a recap. That's why it's called a recap. Because I got to, set in motion the idea of what I'm talking about here. As you see, the Asian session, excuse me, it's already starting to sputter, right? We're already sputtering here on the Asian session. So the Nikkei is down 170 points. Now, literally, yesterday, the Nikkei had a banger of a day. I think the Nikkei was up almost like 2% as well. It was like yesterday, right, in this future scenario. And then, it got a little push when our session opened up too as well. So it's not a secret it's giving back some of those gains now. That's to be expected, so to speak. It's to be expected. right? So it's down, basically 0.60%, 60 right there of a percent here in this, overnight session thus far. And the Hang Seng, of course, the Chinese market in this case, right? They're down, 0.30, right? So yeah, they're starting to show a little bit of that, a little profit taking. Like Algo's got to cool off a little bit, right? Necessarily mean that they won't turn and rally, before the night is over with, because we've seen that happen a lot, right? Especially if Europe definitely opens up, with a little bit more strength, especially running that London session, then that could easily turn those markets as well. Not saying it's going to happen, but that's just, how you start looking at all this stuff. If for the fifth, we all be drunk. So that's why you see us, barely, scraggling, we scraggling here a little bit, but a lot of this is just, again, after nearly 2% run today. Of course, people going to be a little bit more cautious here in the future, right? They'll let the algos pretty much take control, because now a lot of the volume that we were, getting obviously last week is now starting to dissipate, because people are shutting down their trading firms. They're going away for the holiday. So a lot of this is going to be algo driven. Like tomorrow, you may have a couple people still lingering around, but for the most part, it's going to be retail traders and algos is to be trading the market tomorrow. Again, hence the idea of my little thumbnail. Right? You're going to have that Elon Tesla bot trading tomorrow, right? You're going to be trading for Elon. You're going to be selling shares for Elon, right? But so you guys need to know that, right? So that way you don't get too excited if you see little spurts in the market. That's going to be algos, right? It's going to be algos, right? For the most part. And then, again, some retail. So, and typically that's when people realize if you're going to get any kind of idea of a rally or extended rally, well, a lot of it's going to be driven by the algos. Why? Because that's when markets typically have a more upside bias. When there's low volume and the algos got control of stuff, it's going to be hard to beat that market. Why? Because they're methodically buying at ratios, right, in terms of within the spread, to always give the bullish trader an advantage over the bearish traders. Couple that with retail traders buying options like they always do, buying the dip, buy the dip. It's hard to not have at least what they call a bullish day. Now, that all sounds good in theory. It does have a thesis value where it can, definitely materialize, or it has happened in the past. We still, have to see it come into fruition. Why? Because we still have a lot of different variables on the table. But as of now, that's what, notes the idea that we could potentially have, some more upside leading into at least Thursday. Not saying, don't hedge, right? That's why I say also, be cautious if you out there in the market like that. Make sure you hedge where you see fit, right? Because I'm definitely, I'm looking to do just that. What's going on, Sister Sharon in the building? I see them popped in. Shout out to Sister Sharon in the house. Peace, power, and profit to you, right? Happy to have you here, right? So, hey, as of now, that's the energy, guys. That's the jump off, right? And again, I know you guys are out there doing y'all thing as well. You're in the Forex market, you're hitting that crypto side up, because we got to balance in Bitcoin, obviously, right? Again, that's that divergence I was talking about, the convergence I spoke about last week, how uniquely like Bitcoin is just really, really respecting the energy of the equity markets right now. And it doesn't really supposed to even be that way, but we know a lot of retail traders are using that futures market too to be inside some of these Bitcoin futures and so forth on, and they're just really utilizing some of these equity-based crypto plays and MicroStrategy and the Grayscale Bitcoin Trust and Ride and many others. So, and there's other ones too as well, because now you have those kind of offshoot, like Visa, MasterCard, because they're dealing with Bitcoin now. Square, y'all get it, PayPal. These fintech companies for the most part. So they're just utilizing that as another I guess another added value of nitrous oxide to the whole bullish machine, right? And so if it's rallying, the SP 500 feels good about it too. Like, okay, yeah, we'll ride with you, right? Typically they're supposed to be diametric opposite, but that's just not the case. That shows you how inefficient markets are right now, where the market just can't read thoroughly what's really going on with itself. The markets are really in a haywire perspective. To be honestly, on the technical level, organic level, the markets don't know what to do. Bonds literally at this point supposed to be rocketing, and a lot of them are just still staying stagnant. The dollar's ripping right now. The dollar actually supposed to be falling right now, and it's still ripping, right? With equities ripping, dollar ripping to bonds, just sitting in no man's land. It's crazy. So the markets are out of whack. It's broken. Officially, Jerome Powell has broken the stock market, and too much of the buy the dip culture, they have broken the markets. So much so that I'm like, man, look, you have to be cautious. Again, you're gonna have to be very particular and prudent in your decision making when you're choosing these directional buys. And if not, you need to hedge. You need to hedge. It's not even up for debate. You need to hedge. All right. Why risk it? It's not even worth it. All right. So just go ahead and put on that extra protection and protect your scenario and your money, and you'll be fine. What's going on, brother? Snotball in the building. Does Snotball in the house. Shout out to Over Snotball in the house, right? Right. So that's what we're talking about here. So yeah, Christmas rally, maybe. As of now, they might have kickstarted this, the sleigh, right? They might have, gave them, the reindeer, a little bit of that, some of them hallucinogenic type of mushrooms or something. I don't know, right? Whatever, right? They gave them some erg jerk, maybe. I don't know. They're trying to get these, this market fired up for these last little couple days here. And with that also being said, as of now, the energy is definitely to the upside based upon what we got out today. A big overbought by a rally, of course, but y'all know markets can remain irrational longer than they can remain solvent. If they want to extend it, they definitely can. Why? Because again, it's an algo-driven marketplace right now. More so than you have more, human interaction, because a lot of these funds, again, these fund managers, these funds as a whole, they've packed up. They're on the road. They're on a private jet somewhere, heading out to their, private yacht somewhere or an island, so they can get from around all y'all with their COVID. Yeah, y'all ain't spread that, that Rona, that Omicron. They out of here, right? They're like, no, y'all can have it, bro. I done made enough money. I do this stuff remotely if I need to. So the market's going to be dependent upon, the carryover energy that we already have, coming out of today. Right. So so again, the indices that move, or the sectors that moved today were very obvious. Again, just come over to the heat map really quick here, and then I'm let the family start building a little bit here too, right? Definitely want to see if they had anything on the table that they might have traded or were looking at too. But let's go to the heat map real quick. Let's show you exactly what I'm talking about now. Heat map is not necessarily the word I would want to use today, because ain't nothing. The only heat I see up here is green, right? I see a lot of green heat, if nothing else. I mean, look at all this here. I mean, the only sectors that really sputtered today was, you had a few utilities, obviously, right? The real estate hit or miss, right? But healthcare was kind of the only one in certain sectors, certain ones that had a little bit of I don't know, little hesitation today. Like, of course, Johnson & Johnson, they still dealing with the idea that their vaccine is, it's second to I don't know, maybe getting a penicillin shot to fight the COVID. I don't know. Shots fired. Don't y'all come for me, Johnson, investments, right? So it was dusty today. It was beaten down. Pfizer just overbought. Yeah, we know there's news surrounding the Moderna, Novavax, because both of them are coming down because they're still saying that Omicron is not that serious. They keep trying to beat that horse. So all of the vaccine stocks want to rally because they want to feel important that they're needed, but hey, that's live by the sword, die by that sword, right? They made themselves, a diametric opposite perspective based upon the value of the state of our health, economy in terms of the virus. So if there's any news that says, we're actually getting this under control, it's not that bad, then that don't really fare too well with the algos looking at these vaccine plays, some of them, right? So Moderna, Novavax took it on the chin. AbbVie even was down there. Bristol Myers, Merck, obviously, as you see some of those names, y'all kind of know who these stocks are. But outside of that, guys, and then some of these consumer as you see, consumer defense plays like that, some of them, right? But now most of these are consumer discretionaries in most cases, and then some of them that are mixed in terms of consumer staples too. But that's odd because like Costco was a little bit down, not a whole lot. Pepsi, right? Of course, MO there. I think that's what's that? The cigarette company, I think. MO. Is that Mojo? Yeah. I forgot who that is. Philip Morris, I think. But yeah, some of those were, a little red here and there. The others were rallying. Like Walmart was barely up today by 0.3%. Target, green. Coles, Coca-Cola, excuse me, and no, MO is Altria. I got that. I was like, hold up, MO, that's Altria, right? They do tobacco stuff too. Anyway, but that's outside of that, guys. That was the only red, notable red in the market. Everything else was just green. Look at the financial sector. See, the financial sector rallying like this, that tells you that the bonds and the yields are definitely needing to be respected. Now that they're trying to tell you that it's time for yields to start going up. Financials really don't rally until they really have a clear understanding that they really can, they can really eat and feed off the market in the way that they normally do through the value of their interest rates, right? The interest rate hustle. So again, the idea that the yields are starting to the idea of thinking that, okay, with the value that tapering is going to kind of, increase, the idea that the rate hikes are on the table, that we're particularly going to have these certain ones happening at certain times, they're starting to kind of really feel their way into a more of a bullet cycle. And so, yeah, financials definitely in a position now where you want to keep your eye on those, right? Even some of the fintechs within that, keep your eye on that. Keep this sector here definitely in your rotation at some point, because it's going to really rear itself the more, the idea that they keep, beating that drum on tapering and, okay, yeah, we're going to do more interest rate. Yeah, that's good for financials. Right. And then outside that, tech, right? Tech just refused to die, right? No matter what you do, tech ain't going to die no time soon, right? Look, it done took bullets, chainsaws, barbed wire, acid, to the throat, everything. Tech ain't going nowhere, right? Eventually, they're going to start, showing weakness again. Of course, a lot of them are already down anyway, because we do know that the QQQs have been beat up, right? Right? Let's be honest here. And so when they have these little small daily rallies, daily pops here and there, yeah, okay. It's a little, a reason to get excited, but ultimately you still got to be cautious. Why? Because a lot of them are still, highly, highly overbought. It's hard for us to say that because we got a lot of these stocks in our portfolio long term. A lot of them still have very, very high PEs, right? Price to earning ratio, 4 PEs. It's just ridiculous because they carried the market during, the thick of the coronavirus scenario, right? The pandemic quarantine shutdown scenario is what I'm saying. So yeah, it's hard to look at them that way. As you say, man, they still, solid because they got big moats, they got big bank accounts, free cash flow, all that. Yeah, but still, charts, algos don't care about all that. And then when they do a search and destroy, they're going for stocks that have high PE, 52-week highs, and just basically overbought. And that's what happens. And yeah, you can have off and on rallies in between that, but for the most part, you still got to clear that hurdle off that radar of those algos. So today is just no more than just, okay, we trying to, wheel the crypto rally into play. So yeah, we need tech to rally. Okay, whatever, right? Whatever, right? So that's why you have the indices all looking literally the same. Look at the price action. Look at the Dow. Look at the Qs. Look at the SP 500. Almost identical, guys. Look at this. You couldn't make this up. That's algos. I ain't making this up. Y'all see this here, right? Dow, NASDAQ, SP. Look at they look all almost identical to the T. That's algos. See, that's what I'm talking about. The robot, right? The war machine, the machines, they cut the machine on Mortimer, right? Right. What's going on? Darren in the building, right? Dan in the building, Darren in the building. Shout out to you. Thank you for coming through today. Right. So that's algos. So again, no coincidence, guys. So let me throw my robot up there. See, that's why I got the robot up there. I got that Elon Tesla bot up there for a reason, right? Is the Christmas rally still on, right? And you got the arrow pointing towards what? To the upside, and also point towards that robot, because that's who's driving the market right now. That's who got Santa Sleigh right now on cruise control. The reindeer back in the barn, chewing on some brownies, right? Some hemp brownies or something, right? But some hemp alfalfa grass. Right now, the algos got the bot driving the Santa Sleigh, right? That's what's driving the market right now. So, yeah, given the circumstances, if nothing really crazy come out of, Asian markets and European markets, you may can squeak out another day or two, maybe a day or two of some good rally or not. It depends on how people feel about tomorrow, if they just want to kind of ring the register after having such a monstrous day today. But for the most part, the dumb money still gonna be out there buying the dip. You ain't gonna stop them from being that. That's like kind of like the AMC army. They're not gonna relinquish that idea to be able to buy the dip. And so until those things change, that those extra layers change, then yeah, expect that you may see them fight to try to keep that level of bullish sentiment in play. But today was definitely the day to really really get you some nice gains, because we saw them just kind of just push this market like it was just none other. And yeah, we seen that before. We're used to that. It's nothing new there, right? It's nothing new there, right? It's nothing new there, right? So that's about the for the most part. Again, when I say predictable markets, that's why I had no problem buying those swing puts. Excuse me, swing calls. Right? I had no problem buying those swing calls into today, and because again, I saw how they played out the bottom of that support. And the rest was just okay, yeah, reading the cash res, and and boy did I, right? And so really, really good couple days starting the week off, leading into the to Thursday's last day. So far so good, right? Using a lot of house money now to finance the rest of these little puts or calls or whatever at this point, because again, I think we got our best, some really good 2 days of trading in terms of a peak to trough scenario, in a way where this was a good moment to kind of do your biggest damage and then just kind of play on the back of scrag, weak stuff in terms of Wednesday, Thursday. We'll let the market prove itself to us at this point. All right, let me put it in that perspective, right? So yeah, so that's your market, guys. And outside that, you had some small caps banging today, because we know that IWM was the biggest, the biggest gainer on the day in terms of the major indices, right? The IWM, which is small cap Russell, the Wilshire, if you're real old school, y'all probably know about the Wilshire, right? It put up dang at 3% plus. So small caps finally rallied. They've been getting beat down the most, of course, but they rallied hard today, right? They rallied hard today. And so that's why you had a lot of these little, other little small cap stocks. You had like RLI, right? Reliance Global, right? You had BFRI, that was rallying today. BioFrontier, that one's a big rally. They went up over, I think it was up around about 60, 70%, 80% on the high. Relight was up over near 170, somewhere around there, maybe, give or take. That near close to near man, it was over 200+% from the gap up from $3, because it got up near 8. So it was up majorly, dang near in itself near 300% at some point. So those were some big bangers. ISO, ISPC rallied on the back end of the day somewhat. That was interesting, right? I was sitting there watching that too. I was like, man, this is crazy, right? And it's weird too, because like when they start banging out or rallying, a lot of that was based upon the imbalances, right? So they was waiting on the balances to come out apparent. So people like all these oversold stocks, or these stocks that are highly, shorted, they had high short interest. Guess what? Those were the plays that, caught those back in the day kind of rallies too. And I was like, okay, so we know what this is about. So you always have that Christmas rally of the small caps as well, right? Some of y'all been around for a while. Y'all know exactly what I'm talking about. Well, small cap will catch a bid, right? Some of these, low float, high short interest stock, they'll just go root out those shorts that are sitting in them. They might have packed up a little too soon and went off to their little beach house. And they just squeezed the brakes off of them, right? So definitely ISPC was one of those, and there was a few others that started, banging out in the back end of the day. So those will be interesting going into tomorrow. So just keep your eye on a couple of those if they have any continuation or not. We'll see, right? So again, for some of you guys who might not be familiar with FinViz, this is definitely a site you want to have in your in your bookmark. It's worthy of it, and the free version is definitely just phenomenal in itself too. So as you see here, it gives you a lot of these signals that we're talking about. Top gainers, new highs, overbought, unusual volume, upgrades, earnings and stuff like that. So a lot of little stuff that you can utilize within your watch list or your daily, kind of observation, what may be going on with the markets, oversold plays like that. You can get a little understanding what may be popping, right? And so, yeah, you don't necessarily have to buy the premium version unless you want to. But yeah, you can really get some good use out of this right here because it's a really, really good tool to have. I think, in my opinion, it's almost like a given. And they have it where you can set presets and set scanners and all that to find certain stocks. So we definitely use FinViz over here. No secret to that. All right. So yeah, definitely bookmark this. If you're not familiar with FinViz, you want to have this one in your life. Right. So that's what we got for us. Market today in terms of oil, natural gas, all those things were kind of popping a little bit today as well. So as you can see there, right, gold was up a little bit today as well, slightly, but nonetheless, we know that the ideal of the inflationary trade is in terms of gold, it's starting to really start to pick up a little steam. So keep your eye on gold or precious metals, period. Commodities as a period. Period. You want to keep your eye on those at this point too, because the more tapering goes in effect, the closer we get to these rate hikes, gold should start responding more and more. That's just based upon how gold trades, right? So definitely make sure you keep that in the back of your sentiment, assessment as well. All right. So that's about it with that. So, with that being said, guys, I didn't kind of covered it for the most part what I was going to talk about. Outside of that, we have some, some earnings, of course. No secret there. Two of the most notable ones last night was Nike, of course, and Micron, right? So a lot of people were definitely wanting to hear the report coming out of Nike because why? They're giving you the breakdown on what? Supply chain issues or the lack thereof, right? Are things getting better or are they, still the same, right? Or are they getting worse? Because people are starting to kind of somewhat go back into lockdown. If they're going back into somewhat of a soft lockdown or a hard lockdown with some of these nations, especially when we talking about in that quarter over there, Vietnam, whatever, where a lot of those Nike shoes come out of them factories. Yeah, Nike was trying to plan for the idea that things starting to get a little better. Then, that's when they monkey wrench they plan again. But as of now, they respected, Nike's ability to kind of talk their way out of their situation, and they called a bid. Right, Nike stock called a bid on the earning, and I mean they beat, the EPS, and they beat their revenue, right? But everybody was still thinking themselves like, okay, well, how you gonna, dodge to guide it? So you gotta guide, either in line or you're gonna have to take an L and guide it because you can't really forecast all this sequential growth, knowing that we all know as well, the entire world know that we got those supply chain issues are not yet addressed. Boats still out there at ports waiting to dock. Airplanes are still, hurting in terms of not just COVID, but certain stuff can't move because other people ain't ready to receive, even though they feel like they want this stuff. But that's supply chain issues are not, as superficial as one would think, right? When you hear the analysts talk about that stuff, they make it seem like it's just a blip on the radar. It's not, guy. It takes a lot to mechanize logistics. Trust me, right? I've been in this space a little bit before. I dealt with even a little bit in military, just in, by way of, being in military. It takes a lot to mobilize, and it takes a lot, logistically to make sure everything in play because it costs money. And so a lot of this stuff is not as easy as they say it is. But again, leave it to Nike to kind of give you a good forecast. Why? Because we know a lot of their stuff is what? It comes strictly from over there, right? They're not, there aren't any Nike factories, in Atlanta, right? I was yet to see a Nike factory in New York. Now there's Canal Street where you get them knockoff Nikes, but they ain't the real Nike, right? Ain't nobody, right? Ain't no real Nike factories in the state of the United States, which is sad to my knowledge, right? There might be one or two small, but if that stuff comes from overseas. So again, the one product that the world loves in terms of footwear, all that stuff is outsourced. So that's sad because again, whatever, they call them sweatshops and all that, but it's the same with Apple. Apple the same way, right? They outsource a lot of their stuff and whatever. Right. So as you can see there within that, down in the description box, I got a little commentary down there. But Nike, they were there to eke out, 83 cents. I think the street was looking for like 76 cents or something like that on EPS. And Nike beat it about 8 cents, right? Coming in at 83 cents per share. And revenue was all right, revenue was kind of, pretty much, they beat off on revenue as well. A lot of that stuff was because, inventory that was already in-house and people are still taking what they can get. If you can't get that special one that you might want, if you're not going to go to a specialty, trader collector and pay that premium, because you're going to pay that premium regardless, they feel like, they just people just gonna buy what they already got, in-house, and that's basically what happened. So nonetheless, it helped their revenue to the degree where they got to beat them top and bottom. And again, they tried to deliver a very surgical commentary on the guidance, because we knew the guidance was not going to be stellar. And they talked the good game.
They sure did.
You sat in that call, oh Chris?
Oh yeah, I got to sit in on them. I didn't.
Yep.
I bought me some puts and I bought me some calls. Took L on my puts.
Gotcha. You hedge. Got it. Mm-hmm.
So it's all good. Yeah, they definitely tried to talk a
Smart
good
move
game on that.
Right. And we were expecting it too, because that was the whole thing. Because as well as I know, as a purveyor of sneakers yourself, this is a part of what you do as well, right? In your business practices, all the people who are out there in this space they knew that they're sitting there, they're like everybody else, like, man, bro, it ain't the getting ain't as good as it was before, because this stuff is really starting to affect the connoisseurs out there, right?
Yep.
So yeah, it ain't easy to you can go up to Foot Locker and find what you got that's left on the shelf, but real collectors out there ain't going to Foot Locker to get collected items, right?
Facts.
Right. So that's again a barometer how to how you can tell what's going on in that space. And Nike being the kind of the big boy on the block, but what they did also use is that they also had the ideal. Well, it's not even an idea at this point. They've been hitting on it for a minute, because now, like anything, anytime there's a new major crave of an industry just starting to be, brought into fruition or born, if there's other players who can benefit off of it, they will latch on to it like a parasite. So this whole metaverse scenario now, right? So now they're finna move into the metaverse in terms of digital sneakers. Couldn't make this stuff up, right? Nike NFTs and Nike metaverse sneakers on the within the metaverse are going to be a thing now. Where the same way you would spend $300, $400, $500 for a pair of collector Nikes now, $1,000, you're going to be paying that much and probably more in the metaverse to have a pair of Nikes in the metaverse. Now you can't put these shoes on, mind you, right? We're talking about the metaverse. This is virtual reality. And you're going to be paying at $2,000 or $3,000 for a pair of Nikes in the metaverse.
Tough.
That make sense, somebody. Right? Somebody make that make sense. All I see right now, I did right here. When I see people talking offering the pot $3,000 for a pair of Nikes in the metaverse, I'm like, yeah, boy, what kind of bananas you eating? Right? Not happening. That's just me. Now I'm speaking for myself. Right? That ain't happening. But they're moving into that space. Adidas had already moved into that, starting to move into it as well. So they're trying to keep up with, I guess, that in crowd. Makes sense, I guess. But Nike collector shoes as a whole, they're real collected item in the shoes. Well, we know these by far, they've always been, basically, archetypes values of NFTs. Why? Because they're rarities. They are rarities, right? Mm-hmm. They only make a certain amount sometimes for certain, certain ones. And so, yeah, if you got a pair, you that guy, or you that lady or whatever. So
facts.
Who knows, right?
I know it's been 3 or 4 shoes that they had to push back into next year. So they it's one shoe right now. It's called the Patent Leather Bread, one of the first Jordans that ever came out that Michael Jordan wore, which is the black and red pair. It's a Jordan 1 that I know Europe and Asia had a pushback, so to speak.
Which one? What do they call? Which one of those are? I know these ones, but what what's the nickname they gave them?
They called Reimagine.
The Reimagines? Okay.
Yeah. Air Jordan 1 Reimagines, which is they patent leather though. So gotcha. We call them patent leather breads, but right. They supposed to drop on the 30th of this month, day before New Year's Eve. So, people was, spreading rumors saying that, they're gonna get pushed back because, like I said, they had 3 or 4 shoes that they had to push back into next year. Mm-hmm. And then, dealing with that too, certain shoes is delayed. They don't come in on time, like the cool grades that just dropped maybe like a week or so ago. All the foot sites didn't get their pair. And, so just dealing with that. I mean, like the reality is, man, I can talk all they want. Like I told them, crazy people in the comments on Webull, let's stock to it. I'm like, man, listen, you can win today. But Nike know the reality going forward that, you know, they can say all that bull crap all they want to, but you can't talk your way out of what's really going on. And they China numbers was horrible.
They China numbers were like beyond horrible, right?
Right.
Weirdly so, China numbers carried them all actually during 2020. It's crazy because the American market was messed up, right? We were jacked up,
right?
In the thick of the lockdown, and Asia carried Nike during 2020. Truth be told, a lot of people don't want to deal with that, right? But you know, because they can't understand that, you know, like it to them it seems like it don't make no sense, but it does, because just like rap music, let's be honest. Just like rap music, some of the biggest people who still buy actual rap, you know, CDs or rap discs or however they are today, like you buy the down street, a lot of that ain't really, you know,
the folk exist no
right? Right? That's them people that be going to them concerts and stuff like off, you know, that unfortunate what happened with, you know, that Travis Scott situation. But a lot of them people, man, that ain't, you know, they ain't the hood, right?
Right.
Let's be honest, right?
True story.
So it's weird, man. But yeah, Nike, they did get up there, and boy, they sung a good song to keep them analysts hugged up and not wanting dump the stock.
Yeah. First thing they were saying, they kept talking about all the athletes that they got going on and promoting them. I'm like, man, we don't care about that, man. Get to the
window
real
dressing.
Stuff. We know you talking BS right now. We
Who
don't care about them athletes.
With the Devin the dude, you must be used to all the finer things. That's so good. Old school with it.
Yeah.
That's basically what they done, but they sung that Devin the dude song real good, boy.
I'm like, man, you got a couple people on there that have some good questions though. They kind of pressure to me and they, you know, wiggle it around, and I'm like, man, come on, bro. I know this stuff, man. It's the what's they call it, that old two-step y'all doing.
That's all it was, right? It was a shuffle, right? That's what they called it. What they called it on the block, the Hebrew shuffle.
Yeah.
They're doing the Hebrew shuffle. What's going on? Ilba Tamika in the building, all right? What's going on, Brian Schwartz? What is he in the building? He said, let's go, Brandon. I got you. That's it.
Yeah,
so,
man.
Yeah, man. Y'all, I mean, shucks. Y'all, I mean, you already know, Chris, because they definitely trying to, you know, keep in their case, of course, we know that big old gap down there still too. So that's why they trying to live and fight another day. Right?
Yeah.
They just like the market did yesterday, they refused to close that gap, right?
Yep.
How you refuse, if you just close that gap, that gives you validity on your rally.
Right.
See, this is the greediness. It was nothing for Nike to go down and close that gap. They could have hit the gap even during the sell-off during, you know, because of the news, and ran it off of the next day.
Yep.
That's legit. At that point, you have now, you know, added validity to your retracement, right? Or your gap closure. And so the level of the greed, again, it just makes it, yeah. Anyway, y'all get it. But see, that's why we had these discussions, because a lot of people need to realize that how markets work. Investor sentiment and analysts who are just underwater as a whole, and their greed would not allow them to kind of, you know, allow the market to kind of, you know, naturally correct itself and let some of these overbought stocks correct themselves. They go through this, right? They'll go through all that. And it's like, okay, bro, you were literally right there. That was your chance to do it. And you could have still rallied back into the 150s doing intraday. Why? Because what happened with the broader market today? The broader market went up over near 2% down there in the S&P 500.
Yep.
That means, and then the crazy thing about it, because Nike didn't even really rally that much. It opened up and rallied up towards 170. And then it just pulled back and just traded around about 166 for most of the day.
Yep.
So it did nothing. The broader market was still going up, mind you, but Nike was sitting there sputtering. Because people were some people were taking profit. Big money was starting to take profit. They were selling into that profit.
Yep.
Right? So it's crazy, man. But, you know, again, that's markets, guys. That's markets, you know. And so, yeah, Nike is a unique, you know, scenario because, you know, they do have that kind of level of, you know, just like Apple. A lot of people that, you know, don't think about it. Nike has a really good, you know, moat of followers too, right? You know, on a lot of complex levels, but on the investors base, it has only increased because of the pandemic. Why? Because a lot of those people who were just, you know, the consumers of them, the aficionados within the consumer side of it, when they got into investing trade, they start investing into what? The things that they have a liking to, right?
Yeah.
They start going to Nike because I buy Nike all the time, I buy the stock. And so they became a new kind of unseen cult following, where if you watch Nike stock literally over the past, I'm gonna say year and a half, 2 years, I say 2 years, you can really start to see the strength of Nike stock, really begin to show itself like a real solid, like a big, solid tech company, even though we know it's not a tech company like that, but the idea that you have innovative people who get behind tech stock because they say, well, we know this company gonna be around for years to come. Not like Nike wouldn't, but it traded at or with a high multiple for a reason, right? A high PE for a reason, for PE, because people are now starting to say, well, for what it's worth, its competitive landscape, Nike still controls a lot of the pricing power, because they have that collector's value now, where you can do the NFT, you can do the, all these other sides, like the website we on right now, StockX, right? Where it brings more validity to these are just more than just a pair of sneakers you get in and run around the block and jump in mud puddle. Not people, no, bro. You drop in the mud puddle on some of these shoes, boy, you're gonna be at the house, praying that Allah, Buddha, everybody. Like, I know I didn't wait did that dude do that.
Yeah.
Like, you don't know what he got on his feet and jumped in the like, bro, you're gonna send a dirty bomb to him as in the mail, a virus to his computer. It's that serious, with some of these. So yeah, Nike stock is starting to really solidify itself as a solid, a solid growth investment value. And it's weird too, because at some point I remember when they were just beating the drum on Under Armour. Like, Under Armour finna remove Nike, all that stuff. I was like, oh boy, here we go. And then Under Armour then faded to black. They ain't there now. All that hype was for nothing. So it's to be said, only true competitor Nike ever really had was Adidas, and it's still gonna remain that way. So hey, for the most part, yeah, they got away with a 104 earnings. We'll see if it lasts, right? But yeah, just be conscious about the stuff that we learn, obviously, that we train around in terms of your technical value. There's still air pockets in Nike that had to be reckoned with, and this might be just them just holding up the process, before it possibly does make a leg lower. Who knows? But nonetheless, we'll be ready one way or the other. All right, so Nike, right? Then Micron, of course, microchip, this whole idea that the semiconductor plays are not that bad now, because they're starting to iron out the idea that they may get a handle on these, supply chain issues. So, manufacturing. Then you got companies like Apple saying that, we finna start investing in our own factories to build our own chips now, right? That new M1 chip, they finna go for it. Well, Apple needs something like that anyway. Why? Because when the last time they innovated anything? Like, seriously, right? So yeah, they're trying, right? Because we know they just overbought, I don't know. Yeah, that part. But we'll see. Right? We shall see. Right. So outside of that, guys, that's about for the most part. So Shanika Bumper, she must be busy. She must be hopping off and on. She must be handling business. Right. But that's about it for the most part, guys. What's going on, Family Future Fun Show? Peace, power, and profit to you, man. Thank you for that. Yeah, hit that like button, guys. Subscribe if you're new. Share. Right, y'all know we're a little small operation, but we do big work. In terms, we come on and we try to provide content that's very actionable and reputable towards what we see on a more neutral level to help you in your investment thesis. So we appreciate everybody that comes through. We think that in our own right, we have our own small little think tank. Right, we're not claiming to be no more than what we are. We're just some hardworking people who are out there, who are out here trying to provide some good source reference information to get people excited about opportunity and growth, right? Because we don't own the stock market. We can't sell you anything. So everything we do, we put forth in good faith and initiative that we're trying to also feed off of it as well. So that's why we're very, community orientated in our whole, reality over here, right? So all walks of life does not matter. We're just trying to get us a bag, right? And we're trying to use the market to help us do that. And we go across different asset classes, right? So not just equity, right? We got Forex traders in the building. We got crypto traders in the building, binary options, right? And many others, right? But we all here for the opportunity. Option traders, the whole nine. We all here seeking alpha, right? We all here to seek alpha. All right. So outside of that, guys, that's about all I had, man. And again, for what it's worth, there are a couple of earnings plays in the morning. Of course, we had a couple tonight. We had BlackBerry, of course, people were like, thinking that this was the moment where BlackBerry going to rally. And for the most part, it, after hours, it didn't do nothing, right? It sputtered and basically gave out of gas. And, closed down, I think, around about $9.06, 6 cents. Cal Amp Corporation, they pulled back today. They had earnings tonight. So this was a little, again, a little small stock, around about $9-10 a share. Got me hit like 10, I pulled back to 8.67 after hours. So, they definitely bombed on their earnings. So, I mean, outside of that, you have a couple tomorrow worthy ones. If you want to say that. We got Paychecks, right? That's one definitely gonna be worth watching. Again, we're talking about, like ADP, for payroll, stuff like that. Job market still kind of, hit and miss, in that perspective. So we'll see how that turns out. But CarMax, that's one definitely. CarMax, right? CarMax is a very unique one. And I was trying to, I'm not going to talk about it. But keep your eye on CarMax tomorrow. You got Centos, right? Centos, that's a massive player. Centos is a. Go ahead.
I almost bought an option for CarMax, but I wasn't sure, so I didn't
out
do
of pocket a little bit. I got you.
Yeah.
I'm right there with y'all because I'm looking at it right now.
You can add it?
Man, it's oversold like a mug, and
we saw what happened with old Dusty behind what was that ran that what was that, Avis, right? Avis made that move.
Yep.
Boy, that joker went from basically like $90 to like $500 that day on that earnings day. Wow, I was like, goodness gracious, boy. Boy, that many rental car place and dusted old weed paraphernalia rental cars out in the world for me to do.
Right.
Boy, they ran their brakes off that stock. But CarMax always legit because CarMax literally is like the premier used car dealer literally on the planet.
Right.
CarMax headquarters is based out of Richmond, Virginia, of course, whatever, but they're solid. People know CarMax, right? CarMax ain't no, whatever, right? So, but to their, again, we don't know what their numbers going to look like tomorrow, but they're to their advantage, like you saw about as well, over Brandon. They were to the point where they got to pull back a lot. Mm-hmm. They held the 200-day moving average, which is around like 131 with the 200-day moving average. They held it, right? They got down there to it and fought back above it. So that's positive. That's still a net positive when you look at it. But what they did do strategically during this quarter that they may speak about it tomorrow during the conference call is that they did away with a lot of the new car inventory because those cars were already kind of, less than desirable because the used car market was just doing so well. We know used car prices are up through the roof, right? You have pricing power with used cars, right? They modus operandi has always been used cars anyway, but they did, try to move into that new car space too. By doing so, they had to SG&A, right? They had to do a lot of M&A, not M&A, some CapEx spending because they had to accommodate for having new showrooms and stuff like that. Like, no, go back to your bread and butter because right now used car prices are getting paid. Again, y'all saw the stats on that when we did the inflationary thing. Used car prices are up how much right now? Like 58%. No, not 58%. Sorry, like 30 some odd percent. Yeah, 30%, 30 plus percent.
Yeah, it's up there.
It's up. Look at it, guys.
31%.
That's crazy. I mean, if you charge like $20,000, $25,000 for a used car, that's a 31% increase you could put on top of that car, and somebody out there possibly will buy it. Right? If nothing, that's wholesale because they do a lot of wholesale dealership stuff too. They drop off some of the cars to these wholesale dealers so they can have them on their small lots. So CarMax, is a strategic player in the used car space, regardless of what they may say about the broader market, all this, that, and the third. Yeah, whatever. It's not a given because everybody now like, man, this thing gonna dump. Everybody like this thing gonna go to $80. It could. We don't know. If it was the fifth, we all be drunk. But for the most part, the strength of what they have in their favor by dumping some of that new car inventory and staying more centric towards new used cars, and the chart being like Oprah Brandon saying, kind of oversold a little bit in terms of where it came from. this thing could potentially bounce, right? Let's go to the chart real quick here.
I was looking at tip ranks. They said it's undervalued. Basically, they got it at the top of 158. So
that's about the consensus. Yep.
Yeah.
The consensus sitting there around about that, right around that price there. That one. Let me show you because I was on it, right? And I was busy. I'm doing my see right here. All these little things up here. Y'all know what I got them things over there. Y'all know I'm working. Let's know already. See, this right here was speaking about. Actually, they were talking about that. About CarMax, right? I ran out the free stuff. I off and in. See CarMax. You see them tabs open. I ain't let you know. Hey, no. Hey, we tap in over here. I was working, but I was working too. I was working. I was digging through it, because I knew that's gonna probably be the one that a lot of people gonna be all, whatever, right? So yeah, you can see here. Of course, we went over Rite Aid, Bazinga. I was looking at some of them offices. But yeah, I was in here, man, assessing something. A lot of these plays, you see a lot of them with CarMax.
Yeah.
Right? So I was the same way. I already with you.
Yeah. Right, man. Single light. Yep.
Yeah. So yeah, it's gonna be interesting watching tomorrow. Like I said, I didn't do anything. I got too caught up, in other stuff and babysitting my spy plays. Of course, bird in hand beat one in the bush. Yeah. And even though I was trying to do that in between multitasking, like I'm always doing multitask, got this to do, got that to do, like all of us are trained to. Of course, we're not new to this. I just didn't get a chance to get that. It's not that I didn't really feel convicted, right? I'll say my position until tomorrow, of course, meaning how I feel about it. But you can obviously tell by the way I was going through it.
Right.
I was like, okay, yeah, I'm kind of feeling, the idea that, this one here may throw, an upset for certain people, right? Because the sentiment, in a lot of ways, if you look at like chameleon, market chameleon, stuff like that, when they do like, those sentiment gauges and implied volatility and whatever, the IV is up there because people are trying to play that, that inverse and, that they trying to, the broader market is messed up. Everything got to come down like, come down in ashes and all that. And I'm like, you got to be cautious.
Yeah, real talk.
But like they put heavy at the end of the day.
But I don't always go off on that too, man, because they was kind of put heavy on Nike yesterday because intraday, yeah, of course. But
they were.
Look, they was put heavy on Nike, but I'm like,
but you know what, Oba?
Both ways, yeah.
But a lot of that, let's be honest, that's that dumb money retail.
Yeah.
Put heavy. See, that's a lot of people who don't really understand the dynamics like you would look at it, right? As a kind of purveyor within the space, right?
Right.
Or who a little bit more seasoned like us a little bit.
Mm-hmm.
So they're just doing it on the strength because they're doing monkey see, monkey do trading.
Yep.
Dude, buy puts because it's Nike, man. It's gap. Don't say no more. They ain't looked at no fundamentals. They don't know nothing about no, previous earnings call, what was the previous guidance. They don't care about none of that. Right. They think everything purely is a binary event based upon the sentiment of the leading, I guess, loudest person in the room. See, that's the part what makes the market out of whack right now, too. It's not so much even just algos as well. A lot of it is dumb money retail. That's fueling a lot of these irrational movements in some of these stocks, so.
Never talk about that, too. Yep.
Yeah. So.
Retail traders just buying. Just doing all of these crazy options, man. Just buying and buying and buying, losing money. Nothing strategic.
Yeah, and that's what's, again, for the most part, a lot of you guys know, that's how you have such a, the rift in the market now is because, they painted it in a way where it's like suits against retail. It really isn't. That side sector of retail is just a small little sector of these, like, y'all know what I'm talking about, these little AMC types that you can't tell them nothing. Them GME types, you can't tell them nothing. It's them. It's them type.
Yeah.
They do not represent me. Disclaimer for the record. I'm not a part of them. Right?
Right.
So they're lumping them into us and into our little aspect, and we're like, no, that's them the crayon chewers over there, bro. We don't get down like that over here. We ain't sniffing no glue. We ain't huffing no paint. We'll leave that up to them. Right? We'll leave that up to them. right? Because yeah, they're gonna have a wide, again, look, a real awakening at some point, and we'll see. I hope they win. Of course, I would want them to win, but nah, that's just how this stuff works. That's not how this stuff works. So don't y'all take the advice of them people like that. They tell you, nah. I mean, you got some people up. I mean, y'all seen the numbers. Them people up tens of thousands % on a lot of the option contract when them big meteoric rises ran, and they watched all that stuff come all the way back down to a few 100%. How you up 20, 30, 50,000%, and then you watch it come all the way back down to 200+%, 200%, 300%, 400%, and you say, I'm dying my hands, bro. Like, where they do that at? Right? Where they do that at? So that lets you know that's a person who's just definitely unstable in terms of understanding how this game really works and what they're here for.
That's when they was yelling GameStop.
I'm talking about the GME skit with DJ skit with this. I think was lugging, boy. Joker had the woofers on that thing, and it traded today, and that's all they did. They were geeked up. GameStop. Boom, boom, that thing was looming. And they watched all these games just come right on down. I was like, bro, this got to be something out of a comic book, boy. And they still to this day, them people they still radical.
Still in it.
They seen the thing come out, and they just had a recent big support. They had to defend recently. So far, so good on that one. They defended that $25, $26 support. Good thing they defended that because they were gonna be in trouble. They're gonna be out of there. And so their little market rally may help them out a little bit, but they still on borrowed time.
Yep.
But all it did is reinvigorate them to feel like, no, the squeeze is finally back on. I'm like, bro, I'm out here. I can't do this. I can't.
Like,
Y'all able to get this?
I'm done.
I'm done. Cause they hit me up, man, what do you think about this? And what do you like this? I'm like, bro, you know me, I'm very neutral, I'm honest, based upon what I can account for. I'm not finna superimpose this narrative that you've been used to in these echo chambers you hanging out in. That's why you only go listen to people that you feel like echo your sentiment. Now that sentiment can be wronger than two left shoes, yet you still feel confident to sit here with real live money, watch your gains dissipate, and you want me to, I guess back there. I'm not. You were just in it when it was at 50. You should have took profit at 50, right? Mm-hmm. No, man. We waiting for the Moaz. They call it the Moaz short squeeze and all this dumb stuff. I'm like, bro, y'all go ahead on with that. I'm good. Right. I ain't got no counsel on that. Right. I remove myself off the counsel for that, off the bench. I'm good. But yeah, so that's what we're dealing with. So we'll see how the market kind of close out in the year, man. Outside of what we kind of know what's on the table, interest rates tapering, rotation. We was already ahead of the rotations. Ain't like nothing new there. We was already talking about kind of relinquishing some of these high PE growth stocks. Now you need to start focusing on more value plays. I think we've been that drum for the last three months or so, and it's starting to happen now. So one thing I love about kind of outline a thesis of how markets are moving. And if this changes, okay, if A plus B change, okay, then you need to kind of have a contingent plan. And a lot of that stuff is starting to work out. Given the fact that whether we knew COVID was going to have another ramp, we knew that in the winter months, it was just obvious that, it's going to start ramping again. Now, this new mutation, yeah, these are variables. It can happen. We already knew the mutation was still relevant too. But the major, stocks who fed off that, of course, like the Zooms, the Teladocs, many of those type, and they just been bleeding, obviously, right? And so their whole relevant Peloton, right, man, that's a proof, right? All those stocks now starting trying to figure out, if they have any life left in them, they still may get bounces too. There's always bounces in even bear markets. People forget that. Don't necessarily mean these stocks going to zero, but they are becoming more fair valued now, in terms of being priced into the idea that there's no more, just throw anything at the wall, see what sticks. So the more they get a handle on these viruses, with or without the idea of, maybe the broader society, or the global society as a whole, how they made people deal with it in their own respective places. If America keep pushing the narrative that they're on top of it, then we're not going to go back into lockdown, this, that, and the third. Let's get crazy. That still keeps weakness on companies like Peloton and this, that, that, even though they have to reinvent themselves. At some point they will, but it's not going to be enough to take them, just extremely back to their highs where they were before. Right. So, that's just part of, your thesis. When you start looking at these stocks, you have to start factoring that in there. But they will make great balance plays at some point because they are still value plays. But all value plays are not the same now, right? If they say all vaccines ain't created equal, which we'll talk about that, right? And then eventually it came out to be what it was. Like I was telling, I think Brother Aunt them that, like, man, bro, they're like, no, but any vaccines, like, bro, stop that. Yeah, now y'all really going overboard. All things ain't created the same. Stop playing. That Johnson, we were talking about that. I said that Johnson one is bro, it's lacking, bro. It's trash. It's trash. And then what just happened with research a week or so ago? They finally came out and put it out in a presser that the Moderna and basically the Pfizer is way more effective than that Johnson. And matter of fact, that at this point to take Johnson right now just like because you just want to take it ain't really got no coverage. Right, it literally just shooting up on me arm just to have a shoot up or something. I don't know. I'll leave it alone. Move on, brother. They'll come from in a minute.
Right. Water in it.
Yeah, they hit you with a straight saline solution. That's how they hit you. You got a placebo. You like, I'm straight now, but I got that protection, boy. You going right up there. I mean, soon you left the hospital, you probably caught a fresh dose of that. You wait outside around the cone on you, but hit y'all across the head like, dog, bro, just got the jab. Well, give me a day at least to get right.
You said that road over there and got you, dummy.
I'm talking about waiting on around the corner, boy.
Yeah, that's tough, boy.
That's crazy though. I mean, like you called it. You called it with Pfizer. You called it with Moderna when you was breaking down the actual vaccine and what's in it. And I was like, what the hell? Okay, all right. And like, lo and behold, like this is what they're talking about in the news now. Like, which vaccines are actual potent or the ones that people are actually leaning towards to get the jab for.
It was a lot of them. Remember, we had the whole rundown. We had the list. We had literally the list that the WHO and everybody else was using, and we had itemization. We had the timeline between the trials. We were breaking all this stuff down. This is what we were doing all 2020. We had our little. We were doing it. We were doing our thing.
It was on a video. I mean, you got it on tape. You got it on YouTube.
Yeah, we did the breakdowns live. And of course, at that time it was like Sorrento. It was Novio. We had all of them up there, and all of them ended up just, eventually they couldn't, cut the mustard, so to speak. Apparently, and they still ain't trying some of them. But I mean, it wasn't hard to to tear them. You know what I'm saying? At that point, you kind of knew. When it was, everything started to really unfold, who were going to be the big dogs, right? And then everybody else is going to be like, we just trying to get market share, which is still good because there's a lot of people on the planet. For those nations who don't have that, value to have, annex players in their space, and they ain't gonna deal with all the export. They find a more dedicated partner or company that they can just work with, and they'll just supply them, right? And they'll take the chance of whatever their science is, right? Because under the value of the WHO, there's like any coverage is good coverage, right? That's how they were looking at it. Like any coverage is good coverage, meaning any jab is still, better than nothing. Now, we know that science is very, that ain't the most, secure value of advocating this to have out there like that. As if, we already know definitely today that it does not stop transmission. When before it was the language was very ambiguous, right? That if you did have it, you had more, you were more protected, right? You wouldn't be able to transmit it. Then they had to eat that. They had to eat that crow. Because the people who were getting the jab that were flying over the place, they was the ones carrying it and contracting it still and bringing it back. So apparently, but it was the people that were unvaxxed that gave it to them, and that's how they. But still, it was supposed to be that I'm supposed to be defended from transmission, So make it make sense, right? So we know there's a propaganda behind. And look, we using this strictly for investment conversation tonight. Don't y'all come for me too, right? Disclaimer down there. Everything we do is for investors, sentiment value. Is what we do. But no, that was the conversation. So we're at the same place today. Ain't no secret. Again, AstraZeneca, we know they were weak. We knew definitely, the J&J were weak. You know what I'm saying? We knew the fakers out there. They were just trying to get market share. It's the same way Bitcoin went through that Bitcoin craze. blockchain craze. Now everybody jumped to start saying they blockchain Junebug. Like, bro, you sell 8-track CD. Now how all of a sudden you in the Bitcoin business? Remember they started doing that Bitcoin? Everybody was it. Tea companies, cigarette companies got into the blockchain. Like, bro, everybody just riding the blockchain craze. So that's markets, though. Markets is, man, this is a funny place. Now that I look back over the years, but you realize that's how this stuff is set up. Everybody looking to catch a bid. No harm, no foul. If you legal, you throw in a little WordPress out there. If people bite it, look, that's a bad. You do an offering the next hour, though. You better lock all them gains in. They'll lose everybody, because, that's the value of being publicly traded. So that's why you have to be sharp, too. You have to do your best to sharpen your sword so you don't be a victim of, emotional roller coaster, press releases and hidden agendas and narratives that don't necessarily, equate to the reality, So, yeah, man. So it's always wild out there, man. It's wild. Hey, what's going to say? Are you guys ever sell puts? I was thinking of doing monthly on Nike in the video. I rarely sell. I rarely sell puts and calls. Me personally, we have people who do. I'm over a premium buyer outright when I just find like I have more directional buys because I like the bigger bang for your buck. I do a lot of small chain, do a little sort of strain for small chain type of option buying. But there are opportunities out there when you start to see that. Now I would tell you just directly. Of course, the best time to sell puts or sell calls to go in this case, is definitely you have low volume channel values, right? At some point when the algos had the market on cruise control for it seemed like forever, right? Those are the best time to sell because why? You got all the people who are just waiting for these binary expansion moments to happen in volatility, and they wasn't happening because the Feds kept the markets drugged up to the point where nobody could just wake up and realize exactly what was happening in the market, and it just had a slow market, low volume melt up to the tune of something we've never seen, or not in my lifetime, obviously. Covering markets and even going back historically, looking at old data point. The markets ain't never witnessed something like this ever. That's not being, hyperbolic. I'm serious. The markets ain't never witnessed nothing like this ever in its history. These people, I mean, obviously, Jerome Powell superseded people like Ben Bernanke. He was a money printing, wild beast savage. Alan Greenspan, look at Jerome Powell pop on the scene, hold my beer. Nobody has ever witnessed like this ever. Again, we talking about the Federal Reserve had a run on a balance sheet of over $6 trillion. That has happened in a bit of under 2 years. Y'all know, like I've said this many times, you typically don't have that level of run on a Fed balance sheet within 2 to 3, sometimes 4 sitting presidents. This happened in the middle of 1.5. Not even 4.5 banks a day there. And Jerome Powell, and Joe Biden and Trump. This is crazy. Now people say it was the pandemic. No, that's the excuse, right? To run on all this money printing this religiously. This is a wealth transfer. That's all it is. I'm not going to revisit it because we talked about this until we blew in the face. It ain't new to us. But a lot of people can't accept that. But this is why I say markets, of course, are based upon, again, obvious liquidity, obviously, duh. But in this case, we know there's a lot of artificial monopoly money just filtrating the market, giving people opportunity to realize real money gains to go out there and buy real tangible products and real items that has a real appreciating value. That's a money heist. The average person that didn't have substantial savings or a value of understanding how the markets work, they would have never had the inkling in their mind unless they really were around solid. People say, okay, well, guess what? All I had to do is to go all in last year on everything or things that obviously had a well-founded name brand, and I was going to be protected. A lot of people that didn't know about this still didn't have that mindset because they were still, timid and probably skittish, but that was literally the playbook. That was the playbook. You literally could have went all in on everything you got in your 401k, your savings, your Roth, your TSP, especially of course, we talk about stocks definitely that had bigger moats. And some of the off the brand ones that were dirt cheap, they end up killing it in terms of those cyclical levels and the energy plays. When they make the meteor ride. Again, we talk about, look at this NEO. NEO was at like $1 something, 2018, 2019, like $1 some change. And then it went all at like $60. within 2020 into like, man, you couldn't make this stuff up. It was stuff like that.
$1.60, 68.
$1.60, yeah. You couldn't make this stuff up. Man, I'm like, man. So that's what we understand it now historically, how to now better compartmentalize, opportunity based upon market swings, the data within the current status in terms of what we're dealing with as far as industry change. If there is something out there new, of course, now we're in the meta side of it. See what I'm saying? Is how it work? And a lot of people gonna kind of placate this out and wait and wait and wait. And other people already been loading because they know at some point it's gonna It's gonna blow. You see what I'm saying? That's how markets work. We don't write the rule. We have to play by them just like anybody else. But again, we talk about signs of the time when investment theses are rear themselves and there's enough big money starting to get excited about it. That's your cue. I repeat, that's your cue. When a lot of big money start getting excited about stuff like that, that's your cue at that point. You don't have to be over skeptical at that point because you best believe, money, it's gonna move, right?
Say it again one more time.
When that you get that cue from big money, when we have an industry change, when they start, starting to really put out their presses and they start dropping analyst coverage or idea how this space potentially can be, that's your moment to remove any level of skepticism that you might have had still about a particular sector. Because people gonna say, "Oh, that stuff is just a fad; it's gonna pass." Now, mind you, just using Facebook as a case study, right? This company changed they had to rebrand themselves anyway. We know they've been under fire, right? Because they just slap over there at Facebook, right? Mark Zuckerberg, right? They slipped, right? We know the deal. They had to kind of find a way to, act like they're branded, but everybody knows at this point, like you still the same, same wolf, and and just a different color, sheep color. That's all you are, right? But the shift in terms of how they tried to rebrand a scenario beyond the value of the social media apparatus that it did, is trying to pull a Amazon at a point where Amazon really got out of the idea of we're just a online retailer. Now we in the a tech logistical juggernaut in terms of AWS, right? They have a logistical framework that they sell to other companies and make their business more streamlined. They invented that though in-house. You see what I'm saying? That took a lot of money and years. Facebook, okay, yeah, they bought Oculus out. They were sitting on that bacon. They were saving that bacon, right? They finally get a chance now to bring it out. Why? Because that aspect of money now is starting to be calculative to the point where people starting to say, there's a big, I should say, marketplace in a sense for people who want to get lost in reality. Beyond that, of what they got out of the reality shows, let's take this to the next level, make it more personal, where you are the author, of this experience, right? Through a virtual, escape. Games like Grand Theft Auto were already pushing that way back. Look at how long Grand Theft Auto been out. It's the number one selling video game literally in the galaxy. Going to see what it is. You ain't finna beat Grand Theft Auto. They got an audience that's serious. Y'all know what I'm talking about, right?
Yeah.
To the tune, people wait 5 and 6 years for the game to come out. Like they don't make them. That's the old one's still so fire. Look, you can still play Grand Theft Auto 1 and it'd be like you playing Grand Theft 5. Granted, a little graphics and CGI, might be a little, ain't refined, but it's still just as fun. Is my point, right? Because it's endless, right? This is the reality of that to the next level, where you're going to be in control of a lot of that stuff in the space that they kind of really garden it up in the marketing terms. You can buy real estate in the metaverse and the NFTs, aspect within that. It's going crazy. So again, the money is going to be driven by the hype. The people that's going to hype it are getting paid nothing to what? To market it. Word of mouth, right? Everybody sitting on Twitch, everybody sitting on these video Discords and Telegram. That's free advertisement.
Yep.
It's 100% free advertisement. And all they're going to do is just get these people more riled up to say, bro, you right. Look, let me go to Grandpa, get, 100 racks. right? I'm going all in on, on so-and-so token. Or so-and-so stock, because they deal in the metaverse too. They gonna go. This is how this stuff works. Now, is there a good use case for it on the entertainment level for that level? I would say yes. Why? Because you already kind of experienced that through video games. You're just not wearing goggles when you're playing a video game on your PlayStation or PS5. You put the goggles on, it just takes you to a whole nother dimension. You get that extra layer, right? That fourth dimensional layer. That's what virtual reality does, right? That's the next level, right? If kids are going to be moving there, and at some point, of course, it has use case in terms of what, regular innovative stuff. We already know that. We've seen all the movies, right? The precog stuff. We've seen all the stuff at the Matrix. You got people sitting in front of their screen, swiping their hand to the left, and then digital screen in front of them. There's what stuff moving, right? Art imitates life. See how that worked? That stuff was already in play. Now it's starting to be manufactured. You see what I'm saying? That's how the markets look at this stuff. They say, well, can we put a multiple on it, right? That's all they care about. Why don't you like, can we put a money value on it? We can't? Okay, let's go. These people sitting on billions and billions and trillions of dollars. You think they sitting there worried about a little small person that's skeptical saying this stuff ain't gonna ruin people's life? They're gonna lose their wife. They're gonna be in the metaverse all night long with Debbie does Dallas. They ain't gonna never take the goggles off. They're gonna go to sleep with the goggles on. They ain't marriage is gonna be ruined, kids, bro. You think Wall Street care about any of that?
I don't know.
Not one iota. They're like, bro, look, get the upgrade version coming out next week. Trust me. Just now you can just have a half a goggle on and look at your wife through the other eye, maybe.
Yeah, tough, boy.
That's Wall Street. Wall Street ain't got no chill. As one would say, there's no chill in Wall Street. So that's why I always tell people, man, don't lose yourself. That's why we rent, release it. We don't own. I'm speaking strictly for myself, but I know the gentleman here understand that parable very well. We rent, release, we don't own. Even if we own a stock for 5 or 10, 15 years, that's still a long-term lease. That's all it is. That means I'm not going to get emotionally attached to none of these companies. Why? Because all of them are pump and dumps in reality.
Facts.
Right? Last time I checked, for the most part, you got companies even like who's that? What that is? Is it App? App. No, App. Yeah, Apple ain't. Apple don't. Let me see. I'm tripping. I know I'm tripping right now. Hold up. Let me make sure who I'm talking about. But there's some of these big juggernauts out there. Not Apple. I know I was tripping because I get my little notification. What's the company? Goodness, I can't think of that company right now. Well, even beyond that of Tesla, why did you use Tesla? I mean, of course, Tesla's up until they near the $2 trillion mark, they ain't near like anybody else, and they still in a growth level of innovation. They still trying to get their business together. Of course, they're not going to pay out a dividend quite yet, right? But there's other companies out there. I was talking about something the other day. It's missing me right now for some reason.
Was it a tech?
Yes, a tech company, but they're not even paying dividends. But they got crazy PEs, crazy market cap. And I'm saying that because it was a conversation surrounding the buybacks, right? They just keep buying back stocks, but they're not really doing nothing to really get innovation, moving in the company. So they're not even really wanting to pay a dividend, right? So this is a pump and dump. They're concerned with profits. They're concerned with keeping the share stake value of people in these stocks locked and loaded because at this point they feel like the cult following is enough to kind of keep them going through their dry periods and not innovating. They're not going to care about a dividend if they're a young person who just like the idea that this stock is good because the CEO may be a rock star, this, that, that's how it works. Like older people like, bro, we ain't finna be all like that, bro, because you ain't paying no dividend and you sitting on the P like this, you got this kind of cash hoard and you just buying back stock and you ain't really R&Ding with that or CapEx spending. Your SG&A is just kind of very timid. Bro, okay. Now we'll give you a little bit, but we ain't gonna go all aboard. I'd rather dump all of mine in Coca-Cola. Right? Or General Mills, right? General Mills just had earnings, they pull back a little bit, right? Look here, people gonna be low in that boat. Why? Because inflation is still real, and guess what? The price of commodities, grains, all that stuff. The General Mills, look, they finna have pricing power more too, and they pay a dividend. See, that's the difference. So it just layers to the investing. Of course, I'm not saying the tour anybody from investing in stock that they don't have a belief in. If you have a belief in it, go. But be conscious in knowing how this stuff really works. So that way you never, ever, right, get outside of being able to realize exactly how this stuff works. Right? So that's just a part of your own disciplinary perspective that you put ahead of yourself before you go into any stock. You just don't jump out the window just because other people are excited about something. That's not how this stuff works, right? And every company, like I said before, every company out there pump and dump, right? Elon Musk, a pump and dumper. He's the biggest pump and dumper in the market right now, and he just happened to be the richest guy on the planet. By very nature of his pocketbook, makes him a what? Ultimate candidate of a pump and dump, because like everything he says, some people gonna take it like what? Like he God. That's how naive the world is, guys. The world is very naive. Don't get it twisted. A lot of the jokers out here, they naive, right? He dumping shares like crazy. He still got about 9 to 10 billion more to dump before you hit that threshold. And people's like every $30 to Tesla pullback. Oh, I got about a dip. Like you most. You can't tell them. You can't tell them like, bro, let it come down to 800. You can lower more at a lower price. Their mentality is so. See, Jay Powell responsible for this. He's responsible for this, and many others too. But this is what happened. You had that kind of level of lunacy in markets where it's gonna hurt some people in the end. But for the most part, if they wouldn't wait and sit through a lot of, because a lot of them will have to wait through a lot of stuff to pay because they buy it at the top. Again, think about the people that bought GameStop at $400. They haven't sold yet.
Man,
they haven't sold yet. They bought AMC at the top. They hadn't sold yet. They still like, oh, we're gonna get that more ass bounce one day. It's coming.
Yeah, let that go.
You can't see this. See, that's parasitic. That's a lot of these people who come on YouTube. You see them, they call them. I give Sister Camille, y'all be going in on special over Chris, y'all and Andre. They call them Furu, right? Furus, all kinds of gurus. But see, they serve an unnecessary purpose in markets. Why? They get people excited about the opportunity. Hopefully they'll learn from it. But for the most part, they ain't really pushing they're not pushing responsible content, to that regard. It's just like, no, trust me, we good, guys. We got the soldiers behind us. We got an army behind us. We're going to take the suits down. Like, if that's your only thesis, then you're doing it wrong. Right? Because I can assure you, these suits got money with so many zeros behind it, boy, wrap around your house about 8 times. And look, bro, these people been doing it for a while. They got quants, they got publications. Matter of fact, they got platforms that the average retail trader can't even subscribe to, because their money don't even, won't even get them a call from these people to say, hey, we got this data to help you out. They're already seeing a lot of this stuff before happening. That don't mean that they can't take L's. It's just that they're so sophisticated in their level of being dominant in markets against retail traders, because who they feed off of. They ain't worried about Joker getting a little $40 bump. Even if you'll start running up $100, $150, they still like, okay. That's just gonna make us bringing it back down to the earth even more greater, because obviously the elevator and the stairwell and the escalator effect, right? Or the elevator and the escalator effect, right? Stocks take longer to go up than it take for them to come down. The elevator down is always fast, right? It's always faster, right? Gravity. So they know that. Let them play now. Let them get excited. Then we just gonna take the top, take the the little matchsticks underneath the structure, because that's all the thing that's holding them up, right? And then after that, they're gonna start cannibalizing each other. Always happens. Right. So that's why we a little bit more, you got to be seasoned, guys. Even if you're still in the learning stage, you never let your emotions dictate your money. Right. I repeat, never let your emotions dictate your money, because that could be a recipe for disaster. That's the same way they tell you never to go grocery shopping when you're hungry. Right? You can get all the little debits, all the cookies in the cake, the part of Dave Chappelle. You gonna get they ate up all the chicken, and they going in to buy whole chickens. So you don't even eat fresh chicken probably, because your hunger is speaking more so than your consciousness. So your investment need to be moved upon that same reality, right? So again, never go into a trade or investment, emotionally compromised, right? It's just not good for your money. Right? So that's about it. So yeah, so guys, we ready for this thing, whether they're gonna rally or not. But for the most part, we know the Christmas rally is just that much of a fable like anything else, but it does have a merit to it. We know the market is still on shaky ground. It's on borrowed time and borrowed money, literally. So yeah, they can get it in 1 or 2 days, and we may get a bump up. But don't get in my opinion, of course, don't get too comfortable, don't get too loose in your structure. Why? Because we know the catalysts that are out there that's going to really, in my opinion, move the market over the next, 2 or 3 quarter cycles. And it's going to be that what? Tapering and potential rate hikes. And the supply chain issues that they trying to say is peaking, they're going to keep beating that horse. Why? Because it's always good that you can just lie. At some point, it'll become the reality and the truth. Why? Because they do know smarter minds will prevail and they'll work this stuff out. But until then, they just crying wolf to keep the markets saturated in and buyers. They need their funds to still outperform. So they'll tell a retail trader anything because again, they know his little money it's inconsequential to what they really hold on their books, right? And so yeah, you have to be a student of the game, right? You have to be not only a student of the game, but you have to be a visionary in this as well. You got to be able to look deep into the future and find those growth opportunities that eventually you want to pass on to your kids, right? Or your grandkids, right? Because it's not just, okay, yeah, we know we can, trade the market thoroughly. You could do this, that, third. But yeah, at some point, some of this money will have to kind of carry over. It's a form of insurance in a lot of ways, right? Hedge against labor force, right? All right. So yeah. So that's the part of you being a visionary too. So keep that side of you guys, keep it hungry. Keep a hunger within that, I should say. Right. And you don't have to be the biggest geek on the planet to learn this stuff. Trust me, you do not. Because it just takes an understanding how to, dumb data down, look at it for what it's worth, remove all the, the emotional barriers, and deal with, people in real time, in terms of, the sentiments of how people are feeling about things, the same way they go shopping, they're on the sale, right? We going strictly for the sale, just only for the sale. Okay. The item literally the next week probably be down, probably about near the same value of the sale that it was previously before. If it's mega sale, granted maybe an extra 5% more, but the product ain't any less, valuable in terms of the use case you want to use it for than it was then. It's just a marketing blitz. They got you in there, right? To get you in the store to spend money, because once you start spending, you're going to probably spend more because again, we're going in there with an emotional connection to I'm spending money because it's a sale day. Then you end up buying more stuff than you needed to. See, it's y'all get it, but y'all just stay conscious in your scenario. We're gonna keep riding this thing till the wheels fall off. Either we're gonna close start market down, or it's gonna, it's gonna outlive one way or the other. We're gonna be around to make sure we get our portion of it, right? So that's it. So that's about all I got, guys. So yeah, I ain't planning on being on that long. I gotta get up here and get my little dinner in. But that's the market recap for the day. Of course, like I said, look forward to tomorrow. We had a big rally in tech. We got a big rally in financials. We got some scenarios out there with the cycles, the cycle value of markets in terms of the value plays are starting to really catch a little bounce. Of course, I caught a Palantir bounce the other day. It was down to $17.98. It's completely oversold. Same thing you were talking about Overbrand and many others that we've been talking about nibbling. And I bought me some calls for that into January, right? $18 in the money calls. And that thing popped up juicy today. It went up almost a whole $1 and change. And so stuff like that. So just be visual. Take your time to just go through the market and just find those ones like that. Look for those 52-week oversold. Look for those 52-week overbought scenarios and just kind of play within that. See what sectors they are and put together thesis of how you can kind of trade some around this stuff or invest. All right. So that's about it, guys. So I got anything else. So anything else before we get out of here, guys? So I get out of here and go put some giblet gravy in my gut.
You said some giblet gravy.
A little old leftover giblet gravy. I'm just, the vegan version. But anything else, guys, before we get out of here? Y'all got anything y'all might be watching or looking at or want to speak to anything?
No, I've been mostly focused on like you spoke before, like long-term plays and stuff like me. Like I said, I put out in the group, great time to be shopping, everybody. You got these Walmart's blue light specials. Yep. Just do your due diligence behind it. That's it.
I agree. Consumer staples and consumer discretionary within that, they banging today.
Oh yeah.
On top of that, right? So 100% right, guys. So that's why I say about being selective. You have to be able to walk through this stuff slowly, right? Again, don't run, walk. You can see everything better when you walk, and sometimes sit still and just watch the market observe it thoroughly, right? The movements, the news, all that you ingest so much more when you ain't, trying to outrun the market. And so that's just part of our thesis as well, just being patient, right? Being patient, but being persistent, right? Or as we say, humble and hungry, right? But it matters. All right, so that's it. So he's right. So anything else over Chris before we get out of here, guys? Anything else? Thank y'all for tuning in as well on the backside on the YouTube as well. Everybody might have been, tuning in on Twitter side and Facebook. We appreciate you as always, right? You guys are, awesome. Of course, when y'all see us go live and the link is out there, don't hesitate, guys. Come on to the back panel as well, guys. Y'all know we're a community university over here. And like I said, we don't do echo chambers for a reason. We look, everybody welcome here. Come on. You got trades you might be into or thinking about discussing. You're welcome to share them here. Right. So with that being said, we appreciate you. Now, stay safe. Realize that, again, inflation ain't going nowhere no time soon. Don't let them tell you that it is. So that way you don't get overconfident and thinking that, if blue sky breakouts going just because we're going into a new year, new me stuff. Don't fall for that. Be cautious, guys. Guess the money finna drop a little bit in the stock market. It's going to have to come from somewhere. They're going to shift it from some of their profits or something going to happen. So just be conscious of that. That, these people painted, this market into this kind of, Teflon dump experience, but don't fall for it. Reality going to kick in next year. And the organic growth that was supposed to happen this year, it's going to really bite them in the behind next year. They're going to have to account for it. Right. So they got away with it, for the last near 2 years. Don't expect what happened in 2023. All right. The beautiful catastrophe is now beginning to be what? A real reality. Right. So on that note, we're going to roll out on a beautiful catastrophe. Inflation is real. See y'all guys on the next one. Peace, everybody.
Everything is twofold. What's joy is pain on the other hand. And what happens when the one that you love is the main cause of your suffering? I need you like I need air to breathe. I need you to save me from me. I'm caught in your wave, I'm drifting away. I need you to save me. Please don't let me drown. 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 Whoa. Give me all of your lies, 'cause you're my demon in disguise. I learned to love and can't you keep me in, but the walls keep closing in. And I don't wanna die, but your poison feels so right. Why do I want you when you're bad for me? My perfect storm, my beautiful catastrophe. My perfect storm, my beautiful catastrophe. I'm drowning with all of this darkness surrounding. You need me like you need air to breathe. You want me to save you from me. I know that you're trapped inside this wave. Who's gonna save you? Who's gonna save you from me? I can't see you drown. 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 Whoa. Give me all of your lies, 'cause you're my demon in disguise. I learned to love and can't you keep me in, but the walls keep closing in. And I don't wanna die, but your poison feels so right. Why do I want you when you're bad for me? My perfect storm, my beautiful catastrophe. My perfect storm, my beautiful catastrophe. It's a toxic addiction. You're a guilty affliction. Yeah. I can't breathe. I need to get some air, but it's a toxic addiction.
With that being said, guys, I'm gonna get on out of here. Thank you guys for tuning in. Before be sure to like, share, subscribe to the video. Of course, anytime you see us go live, you're welcome here anytime. Like I said before, don't hesitate to definitely drop us a line if you have questions about anything that we can help you with. We do have, again, a plethora of books and PDFs that we can also advise you to. So yeah, that being said, guys, enjoy the rest of your evening. We'll see you guys hopefully again before the actual Christmas Day scenario. We get a chance to go live, possibly if not tomorrow, maybe Thursday. We may do something Thursday since markets are closed Friday. So yeah, just be on the lookout for that. Again, y'all know how that stuff go. I guess hit the notification bell. That way when I do go live, you can catch it, brother. So if not, either way, y'all know, just stay close by, and we can help bring good information forward, then we will. All right. So that being said, we thank you all. I said, Sister Shanika then popped in. We get ready to close out. You have to catch us on the next one, sis. But I hope you enjoyed it because I know you're probably busy like everybody else is. So we appreciate having you in the house as well, right? Our Sister Shanika Leno in the house, right? Our resident Oracle in the house, right? Shout out to her and all that she does as well. So again, with that being said, guys, thank y'all for tuning in, and we'll see you guys on the next one. Everybody on the YouTube side, thank you for participating too, and we'll see you guys on the next one. Peace, everybody. Peace.
Peace.
Peace.